Finding consistent profits in a market gone wild. My name is Don Kaufman, and you are watching a TheoTrade presentation. Well, that title is it's quite timely, of course, given the fact that we've seen a couple of wild days inside of the marketplace, and that's precisely what we're going to discuss. First and foremost is risk disclosure. We're not financial advisors nor a broker-dealer. Of course, I spent over 15 years in the brokerage world, which I will mention here momentarily. But I'm out of the contest. Copyright disclaimer. This is ours. This is not yours. But one of the reasons I throw this up here, well, a couple of reasons I throw this up here, and one of the primary reasons I just want to let you guys know right here, right now, if you need to get a hold of us after this evening's event, okay, right there, support at TheoTrade.com. So we use here at TheoTrade a common inbox, and what that means is if you need to email me directly, this will go to me directly. Just put Don in the heading and you're good to go. So by all means, again, we answer emails here. Like people think, you know, this is the only contact I'll ever have. It's not. You can ask questions throughout the course of the evening. You can also follow up inside of email. We answer hundreds and hundreds of emails every single day. Our offices are based right here in North Scottsdale and Scottsdale, Arizona. Let's get down to business. This is why you're here. So anytime I do a webcast like this, okay, I want to make sure that you guys walk away with something definitive, something that you did not know, something that you can use literally tomorrow. Is that all right with everybody? How many people joining us live this evening, and again, might be brand new, that you've never attended anything from TheoTrade prior to this? And by the way, get used to answering some questions here. These are not rhetorical questions. Jump in anytime. So how many people here are brand new tonight? Never been to a TheoTrade presentation prior to this? Just kind of curious. Always quiet over here. Excellent. So somebody found us through a couple of different means. Excellent. So couple newbies in here. Fantastic. Okay. We are big into educating you in an evening presentation like this. And I am, tonight, I'm going to make you reach for it a little bit. I'm actually going to go a little bit deeper than I typically would. I hope that's all right with you. Again, anytime that you're going to take time out of your schedule, I want to make sure that you walk away with something definitive. So tonight, what we have kind of planned over here, first bullet over here, how you can use my favorite market instruments to profit from changes in market volatility. So we're actually going to talk about changes in volatility. So you're not just about direction. You're not actually going to hear anything this evening really so much about charts. It's about market volatility. Okay, discover volatility ranking, how to use this tool to produce potential profits. I'm actually going to talk briefly about that. Number 3 over here, learn to take directional bias out of the market and use the power of volatility to your advantage. And of course, the logic and strategic formula behind what we term gamma irons. So you understand why these trades work and are working effectively right now. All right, our gift to you. So this evening, I'm going to be referencing what we term the auto expected move indicator. And you're going to see me reference it a number of times in this evening's presentation. Well, twofold over here. Number one, stay with us until the end of this webcast, and we are actually going to provide you that indicator. Again, if you're going to spend the time with us here tonight, I think it's imperative that, if we're going to display the indicator to you, we're actually going to provide you that indicator. And again, you're going to hear extensively about what that indicator can do for you. Again, it's the auto expected move indicator. It's a $497 value. You'll be blown away by what this indicator is. By the way, this is also the single most advanced indicator ever compiled in terms of what we call ThinkScript. It's an indicator that has literally changed the way that we view markets. Again, stay with me right until the end of the webcast tonight, and I will actually provide you the link to that indicator. This is the expected move indicator. And again, I'm just going to briefly mention it right now because you're going to see me use this a multitude of times this evening. And I'll go through it here again, albeit briefly. What the expected move indicator does, first and foremost, you're looking at a screenshot of the spiders. The trading application, okay, happens to be what is called Thinkorswim. Is anybody here familiar with Thinkorswim? Okay, it's not a necessity to be on Thinkorswim. I'm very, very familiar with Thinkorswim. The indicator at hand here, these three lines, okay, is expected move. What those expected moves are, okay, they are derived from options chains. And we're actually going to show you how it's derived, what these three lines mean, okay? Today is an absolutely perfect example that we literally touched down to the edge of the expected move and bounced off of that. And again, I cannot reiterate enough, this expected move indicator, you guys are really, I think you're going to love what we've actually put together for you specifically tonight. Again, the expected move is going to display efficiency or lack thereof in the markets. And it's really guided us a tremendous amount in recent strategy. And you'll see that here. So with that little housekeeping item here, for those of you that are just tuning in, listen, tonight, as I said a moment ago, I'm going to drive quite a bit of course material at you. Again, you spent the time here. We're probably going to run over an hour. I hope that's all right with everybody, because as I said, I have a tremendous amount of education packed in here. So focus if you can, shut the door, turn off Skype, chat, whatever else might be distracting you. Don't just close Facebook. Get rid of it forever. Maybe phone on silent mode. Kick the kids out. No kids. Grandkids, yeah, get rid of them too. But the dog can stay. Listen, all I'm saying is you took the time to be here. Focused, because we are going to, as I said a moment ago, we're going to drive a lot at you here this evening. So a little bit about me, for those of you, again, that are brand new. I watched order flow for 15 years. That is in very large part of why I'm here. So a little background on myself. Again, my name is Don Kaufman, and I've been trading now for just over 22 years. I did grow up around traders, kind of briefly here. Back in the 1970s, I had an uncle that actually started a market making firm in Chicago. That firm actually was launched in 1976. By 1983, they actually owned over 500 seats on exchanges worldwide. The firm was called O'Connor and Associates. He sold it in 1992. It's a several billion-dollar deal. It was actually one of the largest trading firms ever until that point. It was actually the driving force behind the Swiss bank, UBS. Okay, so that is what I think enticed me to get involved inside of the markets. So in the late 90s, when I finally, got out of school in the late 90s, I went to Chicago and I started trading in Chicago in the late 90s, right before the long-term capital management crisis in 1998. That was actually my first summer trading, and traded in Chicago for a few years. I met some individuals while trading in Chicago, and they left the trading floor and started a firm called Thinkorswim. So I followed them. They said, hey, you're a kid. You're at the time a whopping, 23 years old. And they said, you want to go out and start this, help start this company with us. I was lucky number 13 there. I worked for Thinkorswim until we took the company public in 2007, which I was on the executive team for. The company was actually purchased by none other than TD Ameritrade in 2009. And I actually built the entire education division of Thinkorswim. I went on to run education for TD Ameritrade. At the time, there were 7 million clients at TD Ameritrade. And I exited TD Ameritrade in 2015. So about a 15-year stint in the brokerage world. Prior to that, again, I was 3 years a trader and a risk manager. And of course, over the last, now almost 6 years, we have obviously built TheoTrade. So when I tell people, I watched order flow, that's why I'm here. Most people don't really know what flow is and what that really means. It's a big term in the brokerage world. Basically, what it means, I had access to everything you did. And I've seen everything you did, and we studied everything you did. So both at Thinkorswim and TD Ameritrade, in order to compile the education, We actually studied retail traders, which was the best education I could have ever had. We used big data, and we would actually study literally millions upon millions of trades. If you said, hey, what's this strategy? We can actually tell you, did it work? What this individual do to make it work? And we did that on an absolute grandiose scale. So what you're going to learn here tonight, what you learned at TheoTrade, is literally from watching billions and billions of others' mistakes and the knowledge of what works best for retail traders. So a little bit of background on me. I also from time to time still do a couple of TV broadcasts. This one now, it's been a year since I've been back to Chicago. I'm not traveling very much. I don't think anybody is right now. So that was actually in studio on TD Ameritrade TV, TD Ameritrade's network. I'm on there probably once a week. I still do some CNBC from time to time. This is one of the more memorable ones. It's myself pitted against the man himself, Kevin O'Leary. By the way, I'm going to ruin it for everybody. He couldn't have been a nicer guy. And I've talked to him before this interview for about a good 35 minutes. By the way, I was the short in Apple at that particular time, and it worked out quite well. It was a different time frame than we're in right now. So let's get into it. Let's start to trade a little bit. First and foremost, embrace the chaos, people. I mean, do most people think that on a day like today? Okay, I'm just kind of curious, a little positive feedback here and or negative feedback. Okay, how did today go? How did the last 3 days in this business go for you? Okay, and again, I'll take the brief awkward pause over here. When I ask that, I'm not trying to be facetious in any way, shape, or form. I think you guys are going to be surprised. The way I look at marketplace, it's not about, and tonight is not about, should I be long? Should I own Apple? Okay, should I, look at the MACD, the Fibonacci, the Bollinger Band, the stochastic? Okay, tonight has nothing to do with directional bias of the marketplace. None. It has everything to do with volatility. Okay, and what you're going to learn here real quick is volatility is a very good thing. What's interesting is I asked that question there, and how was the market treating everybody the last 3 days? Nobody answers. No, I mean, literally, we had 2 people answer, hundreds and hundreds of people on. 2 people answered. How's the market treating you? By the way, whether you know this or not, when anybody ever asks you how the market's treating you, whether it's up or down, bad or good, indifferent, does not matter. You just tell them it's unbelievable, right? That way it covers it both ways. So volatility is a very good thing. One of the first things I'll introduce to you here, what's possible in the extreme. So I took 4 shots, okay, of my account at separate times during this year. And I'll explain this in some detail here so you guys are kind of familiar with it. First and foremost, what you're actually looking at is a 5-day net liquidating value at 4 different periods of time. What a 5-day net lick value is, net lick, it's the actual value of your entire account if you had actually closed everything out at that moment in time. So I actually started this in February, then we come to March, then we actually jump all the way to July because I could only fit a couple of these on here, and then I actually took you literally to today. So if you're unfamiliar with this 5-day net liquidating value, this is actually found specifically on the Thinkorswim trading application. And the way it works, that's 23rd, 24th, 25th, 26th, 27th, and you can see a fairly consistent progression. This happens to be, this account that you're looking at right here happens to be an IRA. The IRA actually went from $211,000 to $248,000. Okay, that was simply in what? A 5-day net lick value. In February. That was a pretty amazing run inside of February. Then we actually come into March. One of the better times is, again, if you're a volatility-based trader, here's actually March 20th. Here's March 24th. That week, nothing too crazy, but nice incremental gains. Then we actually jump forward all the way to July. Okay, by July, we actually had the account to $393,000. Okay, this week, and again, I don't mind showing you, not every week is going to be spectacular. This particular week, fairly negligible. Okay, and again, that's the end of July. And we have August into September. This has been a fairly good start. Okay, when I say this has been a fairly good start, what you're actually looking at is, well, look, it's only 5 days here, right? So when it's only 5 days, this is Friday, Saturday, Sunday, Monday was a holiday, okay, and today. So if you take a look, the P&L specifically today is about $23,000 of P&L today. The one point I will make over here time and again, volatility, people, is a very good thing. By the way, if you're interested, I took a screenshot of this as well. So these are account values starting back when volatility started to spike. And again, it's an IRA that's gone from roughly $211,000 to over $600,000 in, again, what has been a period of pretty heavy turmoil. I'm going to show you one of the primary strategies tonight that I'm using to work the account higher. This is a screenshot of Thinkorswim, and again, this is the P&L literally today, right down there. Okay, and you can see how much capital. You know what? I'll tell you what. I'm done with screenshots here. So if you guys don't mind, here, I'll actually pull up a live account. This is live, literally as we speak. When I say it's live, I'm actually on the Thinkorswim trading application. So you guys can take a quick glance, and I will show you anything and everything. I believe in kind of full disclosure because I think there's a lot of crap out there. So here, my P&L is still moving right now. I did close out the day with about $23,000 in P&L, but I just wanted to show you on the trading day. So right now it's about 21,000. I only have roughly $92,000 tied up, okay? And that is my margin requirement. So that's the return. If you're kind of curious about the 5-day net liquidating value, that's right here. So the net liquidating value, and again, you can see it literally changing right now in real time. And I apologize if the market was closed at Friday. You know, it closed out Friday, Saturday, Sunday, Monday, and Tuesday, but I like to be as up to date as possible. Obviously, all the various positions in my account are in here as well. So with that, let's move forward. And again, I'll show you my account. If you have any questions throughout the course of this evening, I'll show you the account and quite some detail in the account throughout the course of the evening and really specific trades that I've done in there. Let's talk a little bit about risk because your money's on the line. How you handle your risk is directly correlated to your success in the markets. Too much risk, you're going to panic. You're going to close positions continuously at the worst possible time. And people are incredibly consistent with their panic. Now, I've looked at hundreds of thousands of accounts, and that sounds horrible. When I say that, you know, I looked at hundreds of thousands of accounts, I didn't go into an account and go like, oh, what's Mike doing today? Okay, we studied hundreds of thousands of accounts. And in doing so, you find exactly what works and what doesn't. And the scary thing is what doesn't gets repeated over and over again. And there's so much out there right now, you know, of what's going on in the marketplace today. I have a couple of headlines for you a little later. Okay. But this is the end result. And this is what we kind of term when I say this, okay, this little picture here is the end result. This is somebody puking out of their position. And that's what gets repeated time and time again. What I want you to try to do this evening, okay, push all of this aside for just a moment. Push it aside. Push aside what you think you know about the marketplace, okay? What we're going to talk about briefly here is outlier moves, okay? And you thought an outlier was being a bad thing, right? I'm an outlier. But we're going to talk a little bit about an outlier and getting to know what an outlier really is. So when you think of an outlier, you know, what is it? Okay. And how does that actually pertain to the marketplace? So what are outlier moves in the markets? Okay. More appropriately, how can we find these moves with consistency? So we're going to talk a little bit about some of the outliers of this business. Okay. And to do so and to really understand this, okay, you have to understand a little bit about volatility, okay? And more appropriately, what volatility can do for you. So volatility equals risk. Now, we're going to talk a little bit about options markets this evening. Is it okay to say the option word now? You know, people get very sensitive about this, but, you know, in today's day and age, come on, it's 2020, okay? You got to wake up and you got to assume that options, they're not only here to stay. You know, if I mentioned options 20 years ago, you were like, okay, you're out. You're out of the contest. Listen, I'm not even here to tell you necessarily that you have to trade options, but I will tell you, okay, without hesitation, without unequivocation, if you do not understand options, okay, you are blind in this marketplace. Blind. Okay? We all now know that options in very large part are what have driven the marketplace higher. So without looking at options, when I tell you you're blind out there, I mean, you couldn't possibly know what's going on without the understanding of options. And you're like, well, how's that? And that's exactly what I'm going to display to you right now. So options. Now, some of you have absolutely unequivocally no experience in options whatsoever. That's fine. Push it aside for a second. Option markets can be thought of as putting a price tag on risk. Pricing in markets is determined via market participants. Ultimately, options pricing comes down to supply and demand. You know, you look at this and you're like, what? Okay, here, let's talk a little bit about options for a second. Again, it doesn't matter if you've actually traded them or not. So you go out there and you guys give me, what's a high risk stock? Huh? Let's start to talk about some individual positions right now. What's a high risk stock? Throw them in there. What do you got? Of course, everybody says Tesla. It's amazing. A few hundred people in here, and everybody agrees Tesla's a high-risk stock. Okay? So, Moderna, I'm not doing it. I'm not doing it. Zoom, it's a good one. So Zoom is another really good one. Anything with pharma right now. Yeah, you wouldn't want to be AstraZeneca tonight. By the way, that's what rocked the markets this afternoon. So Roku, excellent. Okay, Nikola. By the way, Nikola is based right here in Scottsdale, Arizona. So with that, let me explain this a little bit. Okay, first of all, okay, we have a stock, and let's come in here and give you just a really brief example. So you have a stock, okay, and that stock is trading right smack at 200. Instead of actually trading the physical stock, you're going to go out and you're going to buy, in this case, a 200 call. And you're like, well, what is a 200 call? Well, 200 call gives the right to buy the stock at 200. Do you have to buy the stock? No. Then why do you buy a 200 call? You buy a 200 call, okay, because clearly you think the stock is going to go up. But buying that 200 call, okay, a couple things about it. Number one, options have dates, okay? We call them what? Expirations. When's the expiration? Let's say the expiration is 1 week from now. Now, there's options for a week. There's options for a month. There's options for 3 years. I mean, there's options for 2 weeks, for 3 weeks, for 6 weeks. It's crazy. But there's an expiration, let's say, for 1 week. Then, okay, there's a price tag on that option. What's the option going to be trading for? Let's make this option worth, okay, $3. So that option's trading for $3. So you could buy a 200 call. What does the 200 call give you the right to do? Okay, what does it give you the right to do? It gives you the right to buy the stock at what? 200. Do you have to buy the stock at 200? No. Do you want to buy the stock at 200? No. Then what do you want? I just want the right to buy the stock at 200, hoping that that stock goes skyrocketing. So if the stock goes from 200, let's say all the way up to 210, what is a 200 call worth? So what's a 200 call worth with the stock trading at 210? Okay, that's 210. What's a 200 call worth with stock trading at 210? It's got to be worth at least $10. Why? Because you have the right to buy the stock at 200. Everybody else in the world has to pay 210. That gives you what we term intrinsic or real value of $10. Now you go, what happens to the $3? Well, you paid $3 for it. But what happens if the stock doesn't move? What if the stock stays flat? Okay, if the stock stays flat, you lose your $3. If the stock goes down, you lose your $3. If the stock goes up to 203, you lose your $3. You're like, this is not a fun game. This 200 call, it sounded pretty good, and it sounded good paying the $3. But the problem is, okay, the stock can go down, you're going to lose $3. The stock can stay flat, you're going to lose $3. The stock can even go up, and you're still going to lose $3. You're like, then why are you explaining this? For this reason. I'm not telling you that that's a good strategy, because I don't think it is a good strategy. People that just go out there and buy calls, okay, it's chaos in the marketplace. But I will tell you this, okay? There's one key understanding over here, and that's this. That 200 call, that option's trading for what? $3? Here's the big question. Why? Why $3? Why $3? Okay? Because it's implying what the stock can do. So that's the one thing that people miss. There's billions of dollars being traded in this option. Let's say that this, okay, is Apple. Let's say that this is Tesla. Let's say that this is Microsoft. Hundreds of billions of dollars are setting this option price right at $3. Why? Okay? Because option pricing in the end comes all down to supply and demand. And I can't stress that enough. If a stock is super risky, it's very expensive options. And if the stock is boring, okay, you know, like what's boring? Like, I don't know, like Procter Gamble, okay, the option pricing is going to be lower. So what's volatility, okay, or risk been lately in the markets? All right. So all I want you to know right now, all I really want you to gather from what I just talked about, number one, understand what a call option has to be, right? And what it is. It gives the right to buy the stock. Do you have to buy the stock? No. People buy options not because they want to own stock. They buy options so they can try to sell options just to simply make money. But that's not the big takeaway on the screen. The big takeaway on the screen is, who cares? Just look at the option price, because the option price is an implication of future risk. You want to see what you can do with that? Okay? You want to see what you can do with that? All right. Okay? What can implied volatility do for you? Implied volatility. So implied, anytime we say, okay, implied volatility, that means options. It means the option volatility. Because whenever I ask somebody what volatility is, they say, it's movement in the market. That's a secondary definition. Implied volatility is much more about what? It's about the option and how the options view risk. So with that, okay, it's kind of an age-old slide that I've used for a very long time. And I just want to take you through this, okay, in some context. And that's this, all right? You're trading a stock. And by the way, I call every fictitious stock, this is a fictitious stock trading at 100. And then we're going to look at some real ones, right? In this stock, we're going to call it stock, okay? And stock is trading right at 100. Now, do we own the stock? Absolutely not. But this stock, okay, has a vol. What does vol mean? It means volatility. The vol is always, always, always quoted in percentage terms. It's always a percent. Okay, so the volatility says 20%. What does that really mean? Okay, it means that this stock, that stock right there, can move what? Up approximately 20% or down approximately 20%. You go, how could you possibly know that? Because that's what volatility really means. Okay, see, what people miss about volatility is that volatility is really standard deviation. It means, okay, that the stock can move roughly what? Plus or minus 20%. 20% of what? 20% of the stock price. In what period of time? 1 year. That says year. 1 year. So 1 year from now, this stock is supposed to go up $20 or down $20. You go, how do you extrapolate $20? Well, 20% of 100 is about $20. So this is what we call plus or minus $20. And it's supposed to stay in that range approximately 68% of the time. Now, as soon as I pull out the 68% of the time, everybody freaks out and they go, where'd that number come from? Don't panic. That's actually what we call one standard deviation. You know, almost everything you do in your life could be broken down into this, a standard deviation, right? Some people are like, when I was in school, I got through because I was in the meat of the curve, the 68%. I use analogies for this, but like, there's really, really good drivers. Like, let's say good drivers is way up here and really, really bad drivers, but most of us actually fit in the meat of the curve. By the way, everybody believes that everybody else is a terrible driver. So that means 68% of us actually fit in the meat of the curve. So when you look at this and you see a volatility of 20% and it still doesn't equate. Okay, it still doesn't equate. Well, I'm going to drive it home a little bit more because this again is all good for what? For 1 year. Okay, it's good for 1 year. But let me ask you the question. If you know, okay, what is implied for 1 year, could you take this, okay, and divide it out and figure out how far the stock could move for 1 month? Maybe. Could you figure out how far the stock could move for 1 week? Anybody? It's pretty quiet in here right now. So you could figure out how far a stock can move for a month, for a week. Okay. Could you figure out even down to the day? Absolutely. Okay. Now that is a term called EM. What does EM stand for? Expected move, expected move, expected move. So we're actually going to show you a little bit about expected move. So when you look at this, it seems pretty straightforward. We're not done yet. We ain't done by a long shot, because I'm telling you right now, if you can understand what's going on this slide and this slide alone, you are so far ahead of the curve. How many people here can honestly say that you use expected move right now, day to day? How many people here can actually say, I use expected move day to day? Just a Y or an N, that's fine. Okay, yes, no. I want to know how many people actually use, right, just this. Okay, so far we have, we got two people, and a whole lot of people in here. So what I'm going to show you now, and this should wake some of you up a little bit, is this is a volatility of 20%, which is relatively low. What's volatility looking like in the marketplace right now? Okay. Does anybody here ever wonder what the VIX really is? Like, what is the VIX? Okay. People say it's the S&P 500 volatility index. S&P 500 volatility index. Okay. That seems, reasonable. So what's it going to do for me? Okay, nobody understands what a 31 VIX really means. I'll tell you exactly what a 31 VIX means. You see where the S&Ps are trading right now? Okay, if you missed it, go right back. I'll take you right back to it. There's the SPX. It's a 3,000, okay, what? $330 product. $3,330 product. What the VIX is? It's the standard deviation for the SPX. You're like, what? Are you freaking kidding me? Okay, now it's going to get serious, isn't it? Okay, because all of a sudden we just took what you thought you knew about the marketplace. We're going to turn it on its head. When you start looking at the VIX, people call it's the fear index. Yeah, how about it's a $331 product with roughly a 30% IV. You know what that means? You know what that implies? For the next year, we're going to rock, people. 30% over the next year. Oh, let me put that actually into context. See right here? That says 31 days. Want to know how far we're going to move in 31 days? Just look over here. It says $243. Okay? If you thought today was scary, yeah, get ready. Okay? Get ready, because you ain't seen nothing yet. I mean, that's the thing that people have to realize. Go a little further out in time. I know people, what about the election? Yeah, what about it? The election's in here. You want to see the election? It's right here, 72 days out. 72 days out, we're expecting a $400 move. Helmets on! Okay, it's serious. You go out like a year. Let's just go out a year. And this is fun because it's like 373 days. It's almost a year. That's $950 move. Oh, you're going to have a 1,000-point move inside of the next year inside of the S&Ps. Okay, come on. That's what that means. That's what that means. By the way, the equations that you're looking at here, if anybody uses this, this is like one of the claim to fames that I have on the Thinkorswim platform. I'm the expected move guy. One of the reasons I show Thinkorswim is because I worked, for the better part of 15 years on this trading application. And one of the main equations that I worked on was this. It was the expected move formula over here. And we'll talk about that at another time. But that's why it's just, nobody's using this stuff. Nobody's using this stuff like they should right now. And I'll just give you a quick example. Tesla. You know that Tesla can move. Everybody popped in here and said, Tesla can move. Just look, look at the right-hand side of the screen. I'm highlighting it for you. In the next 3 days, it's expecting a $41 move, $67 move. You realize, that Tesla is a $347 stock, that has a $330 expected move in under a year. That's how insane this marketplace has become. I want to reiterate it. That's how, and again, this is what I'm saying. All of a sudden, like if you have never seen this before, this is where the light bulb should start to go on. And the reason the light bulb should go on here, you guys, give me a couple more stocks. Give me a couple more stocks, things that you think are volatile. The reason the light bulb should go on everything that you do in this business, okay, if you're starting your look, like here, let me clean up the chart for you for a second, okay? So, whoops, okay. Here, let's just use the spiders. Most people start, okay, and seek something right here inside of the chart. They look here and they throw on a MACD, a Fibonacci, a Bollinger Band. What they're not seeing is this, okay? You know what this is? This is what we call expected move. And the expected move, all we're doing is taking what's happening here, okay? When I say here, we're taking the expected move from this trade tab and we're actually applying it specifically to this chart. Now, okay, to see that visually, all right, auto expected move visually displays the weekly expected moves on a chart. You go, why would we ever want to do this? Okay. That's exactly what we're going to get into this evening. Okay. Take a look. This particular week, we were supposed to move here. When I say we were supposed to move here, the options market bet billions of dollars that we were supposed to stay inside of this range. Did we? Nope. The options market the week after bet billions of dollars we were supposed to stay in the range. Did we? Nope. On the third week, the options market got it right. We stayed inside. Here's today. Did the option market get it? Oh, we're way outside right now. Okay. What you're going to learn about this business is some of the largest opportunities in the business, okay, are these. And these are construed as what we term breaches. Again, breaches of expected move. And I cannot stress this enough. Breaches of expected move. And you're going to see this time and time again. So people were, I said, oh, give me a couple more stocks. Give me a couple more stocks. People actually rattled off a few more stocks. So here, I see a few more stocks. Somebody mentioned like NVIDIA. Okay. Now forget what you think you know about this stock. Forget about the stock going up or down. All I want to know at this point, I'm serious, all I want to know, okay, are we staying inside the expected move, right? And I'll actually mark. This week we did, this week, big breach. This week we absolutely did. This week, huge breach. Today, already outside the expected move. Again, that's outside. This one's inside. It goes on and on and on and on. I'm just showing you the last couple of weeks, okay? Forget that the fact that the stock even moved up, okay? People, that doesn't make a difference. We're actually going to look at a non-directional strategy. What the non-directional strategy is designed to do is to profit from the breaches, okay? It's to actually profit from outside the expected move. Speaking of Tesla, I own one. They're quite spectacular. Put your account in ludicrous mode and you too can actually own one. But this right here, that one, that does not come in your Tesla. That one belongs to me. He looks a hell of a lot like me as well. But by the way, the stock might not be worth $400 billion. I don't know if you guys saw Tesla lost over 20% today. The stock may not be worth $400 billion, but I'll tell you what, they do make a hell of a car. I highly recommend one if you have the means. What expected move looks like over time, okay, is this. Okay, it actually, again, proliferates out. The longer period of time you have, the more the stock can do what? Move, right? The more the stock can move. And you're supposed to stay in this range. And I constantly stress this. That's 68% of the time. But what happens if it does break to the upside or break to the downside? It's an opportunity. It's a huge opportunity. And I continually stress that because, again, people, they miss some of the best opportunities in this marketplace. And that's exactly what we're going to talk about tonight. We're going to be talking about gamma irons, okay, that are designed, okay, specifically for breaches of the expected. So know your volatility. Listen, there's two types of volatility. There's implied volatility and there's historical volatility. So I'm just reiterating a little bit more about the expected move because this is one of the critical aspects. If you can take this away tonight and understand expected move, at that point, all we have to do is worry about what strategy to make money off of it. And again, that's exactly where we're headed. But there's two types of volatility that you need to understand: implied volatility and historical volatility. Implied volatility. Well, implied volatility, okay, is found not here in a chart, okay? The implied volatility is found here in an options chain, okay? And again, let me clarify precisely what I'm talking about. Here in an option chain, right here, okay? And I love doing this like on a live trading application instead of taking a bunch of screenshots, okay? Look, this is an option for 10 days. You could be brand new to options, never have traded an option in your life, but you can see there are 10 days left to live in this option. That's what that 10 means. You look over on the right-hand side of the screen and it says $45. You're like, I don't know what that is. That's the expectation of movement of NVIDIA, okay, in the next 10 days. And you go, oh, okay. But how do they possibly do that? Because this is what the options market says that this stock is going to move. All of these options average together. Literally, if you started averaging all these options together, they equal $45. That's how it comes. Basically, that's how it works, is the expected move formula is an average. And it says, well, based on, and you got to realize there are billions and billions of dollars being traded in here. You know, NVIDIA, that's not even that high of like option volume. We start looking at stuff like Apple. It is sick, people. Look at that. Okay, that's the open interest, 111,000. Check out volume in here. Okay, tens of thousands of options contracts. That's just the 10-day. And Apple is supposed to move $11.42. You want to know how many options traded in Apple today? Here's how many options traded in Apple. Okay, 3 million options traded in Apple today. 3 million options traded in Apple. Billions and billions of dollars, okay, that are moving back and forth inside of Apple. There you go, $11.42. That's what implied volatility means. Then you think of historical volatility. And the real definition for historical volatility is the annualized standard deviation of past stock price movement. Who cares? Okay? You really want to know what historical volatility is? It's price movement. It's actual price movement. So you think of historical volatility, you look over at a chart and be like, that sucker can move. Okay, and if this thing can move and move big, which it is doing right now, if it's moving and moving big, then you could say that that's, it's moving a lot. That's the historical volatility. Everybody okay? So there's the implication, because what options do are implying what 10 days is going to look like. And then what historical is, okay, it's looking through the rear view mirror. So implied is looking through the front window. Historical is looking through the rear view mirror. We okay? Because this is where things get interesting. So then we take that and we visualize expected moves. This is a script, once again, that we are going to provide you this evening. You got to stay tuned right to the end of the webcast, the auto expected moves, because they can visually display a stock or ETF smashing, okay, through, okay, with the options market expected. See, that's the thing about expected. You expected a $10 move. And when I say that, like, on Apple, and we'll use Apple for an example here. AAPL. And Apple was, its expected move is $11. And you can look back and say, what was the actual move was 32. And you're like, whoa, the differential there, what was expected versus the actual, that's big. That's big. In other words, okay, what people get about this is you can see a stock moving beyond what the options market has price movement to be. Right? So once again, we're going to visualize this. Now, this is actually, I should say the QQQ. We're going to look at the Qs. You know what? Forget, I don't need no stinking screenshot. I'm actually going to go to a live market. I'm going to go to a live market and then we're going to apply auto expected moves. Okay? And we're going to use Apple because I was just talking about Apple. So Apple was implying an $11 move in the next 10 days. Okay? Look at this week. It's already outside the expected move. Timeout. Is there an opportunity in there? Okay, you tell me. Is there an opportunity? We've already outpaced what we expected. In the previous week, we outpaced it huge. That week stayed inside. This week smashed it. This week, just held on to the edge. This week smashed it. That week, ridiculous. It was earnings. Nobody saw that one coming. Okay, it was like better than good What's better than good? It's wonderful. Okay, want to see an earnings tonight? That was fun. Here's Lululemon. I don't know if you guys saw this after hours. There's the expected move. Swing and a miss. They were supposed to go here, but now we're here. We were here this morning at 360, and now we're here at 325. Just making a quick point, okay? Because when you start applying auto expected moves, tomorrow we're going to open down here at 325. You got to be taking advantage of this stuff. Again, it's all about, as I said, it's all about smashing through. You know, I was just talking about IWM on the screen. Forget it. Let's show it. Again, I'll drill this stuff into you until you absolutely know it. And you're like, well, but what are we going to use it for? That's exactly what we're talking about. You can see I've got working orders on here. If you apply the auto expected moves, look at IWM. Okay, IWM has actually been behaving quite well after behaving horribly for a period of time. Look how many breaches of expected move the IWM has. It is spectacular, people. Okay, we got to go out there. We got to take advantage of this, because here is your edge. What if the markets continually moved big, meaning the actual stock price movement moves big, but that options did a poor job of pricing those larger moves? First of all, how could we go about finding stocks that are moving more than what the options market expected? Clearly, you just look at this for a second. The dramatic and continual breaches of expected moves are providing ample setups. When I say this, on this screen, this is, by the way, right here, okay, you were looking at none other than the QQQ. There's a breach, there's a breach, there's a breach to the downside. This one stayed inside. There's a breach, okay? Another one. It just goes on and on and on. The NASDAQ is just sick. Okay, it's all over the place. Look how many times this thing is breaching the expected move. You realize we're supposed to stay in that range 68% of the time. Does that look like 68% of the time to you? Okay, it looks like what? Like 80% of the time we're breaking outside the expected move. Okay, this is huge, because look, every instance of the expected move being breached is an opportunity that people are missing. Okay, so how can you find this? And these moves with consistency? This is not guesswork. You use the expected move. It's just not guesswork. You just have to visually use the expected move. And it's understanding implied volatility. And moreover, expected move, it is a step in the right direction. Okay? So we've gone through expected move, and we're beating this up, and people are asking about time frame in here. You're asking all the right questions. Okay? And somebody was actually, what about mean reversion in here? Okay, you're asking all the right questions. So understanding expected move, you need that. Because I'll tell you what, the breach of expected move is the edge. But you got to turn this into a strategy. All of this is for nothing. It needs to be turned into a strategy in order to see profit potential. Okay, so the question, how does this volatility stuff, expected move, translate into profits? Big moves, it's your opportunity. Unpredictability is precisely what you should be looking for. And when I say unpredictability, can you have a marketplace, okay, better than right now when you talk about unpredictability? I mean, I don't think people have watched this thing. Maybe you don't watch throughout the course of the day. Maybe you don't even watch over the evening, okay? You realize what's even happened tonight? This is the NASDAQ. Tonight, these are the futures. They've traded 10,900. Now they're all the way back to 11,100. People, that's a 200-point move already. In what? Well, in the last 3 hours. 3 hours and 200 NASDAQ points later, okay? They're up 77 from where they closed. We are Mr. Toad's wild ride right now. What you got to do is you have to take this and you have to harness it, okay? You have to take, and it's one of the hardest things for people to really get. So I'm showing you right now what an edge looks like in the market. The edge is simply what? The stocks are moving more than, okay, what is expected. I'm going to say that again. The stocks are moving more than what is expected. When you cruise back over to this, to this platform, and I even pull up Microsoft and I click on auto expected moves. Look at Microsoft. The stock is moving more than what it was expected to do. That's not an earnings period. Okay. The stock moves way more than. Huge move to the downside in Microsoft. Okay. Huge move to the upside. Huge move to the upside. All of these, again, these breaches are setups. And that is what is being missed. What do you need to do? You got to get a gamma iron on. Okay. You got to get a gamma iron on. And I'm going to show you exactly how to do this. You got to position your portfolio for these types of moves. So how do you position yourself most effectively for extreme movements? But you don't want to expose yourself. You cannot leave, okay, your neck exposed in a marketplace. You can't get cute, okay? It's pretty serious, and there are potentially billions up for grabs, and there's just constant big movement, right? So I'm going to take you through, okay, what is termed the gamma iron structure, and then we're actually going to get to some specifics, okay, on this. So this is the gamma iron and gamma iron structure. Now, for those of you that have no experience in options, if you have no experience in options, I'm not going to spend the next, hour going through this because, again, I only have maybe 30 minutes or so left. So what I'm going to do is I just want you, if you're brand new, to understand big concepts, okay, and understand the structure of the trade. So here we have a stock, and I'm just going to make it a fictitious example for right now. Stock. If I ever take another company public, that's the symbol. That's the symbol for me, baby. Stock. And the stock is trading right at 200. So do we own the stock? Absolutely not. We don't own the stock. Okay. We do not own stock. We don't want to own the stock. We have nothing to do with the stock. What the gamma iron seeks to do, okay, is to make money for a fast shift to the upside or a fast shift to the downside. It doesn't necessarily matter. And I say a fast shift, all you need is a breach of the expected move. That's what you're looking for. So how does the trade work? Okay. In this case, I'm going to make this as clean as possible. We're going to go out and we're going to buy, okay, a 210 call. We're going to buy a 210 call. Now, a lot of people are familiar with what a call option is. So we're going to buy a 210 call, and let's go ahead and let's say that 210 call is going to be trading for exactly, all right, $3. We're going to make it $3. Now, this is a $200 stock, okay? And the 210 call, which is way out of the money by $10, is still trading for $3. So you know that this is a volatile underlying, okay, by me saying that. Now, at the same time as I'm going to buy the 210 call, okay, I am simultaneously going to sell, all right, a 215 call. And the 215 call is going to be trading for $2. Now, stop right there. If you've never seen this before, I'm buying the 210 call. It gives them the right to buy the stock at 210. But then I'm turning around selling the 215 call. First of all, how do you sell something that you never ever owned? Well, I'm selling something I never owned, okay? But I'm actually selling myself into an obligation. You see, options are about rights and options are about obligations. If you buy the 210 call, you have the right to buy the stock at 210. If you sell the 215 call, somebody has the right to take stock from you at 215. Do you own stock? No, but you have the right to buy the stock at 210, right? So if this stock goes flying from 200 all the way to 250, someone has the right to take stock from you at 215, but you have the right to take stock from somebody else at 210. What would you make in here if we went to 250? You basically would buy the stock at 210. The stock automatically sells itself at 215. What do you make? $5. What'd you pay for this? Okay. I paid a whopping what? Paid $1 for it. Paid $1 for it. This is what we call a call spread. It's a call spread. I'm just buying a call spread, right? I'm buying a call spread here. It's a $5 wide call spread, and that $5 wide call spread is trading for $1. Now, to further complicate the issue, we're not just going to do it on calls. We're also going to do it on puts. We're going to turn around and we're going to buy, okay, what? In this case, I'm going to make it perfect. I'm going to make it equidistant. I'm going to make it easy for the example. We're going to buy a 190 put. Okay, and the 190 put, let's make it trade for $3. Then I'm going to turn around and simultaneously sell, okay, a 185 put, and that one's trading for what? For $2. Okay, what did I actually put this one on for? $1. Okay, so what am I into this whole strategy for? $2. I'm into the strategy for $2. Stop right there. Again, we're going to show you this multitude of different times. This is just to understand the structure. I'm buying a call spread and buying a put spread. I'm buying a call spread and buying a put spread. Why? Because I know, okay, I know which stocks are actually very likely to break the expected move. You want to know what the expected move is? See this dashed line right there and right there? Okay, there's our expected move. So if we know what the expected move happens to be, we're just going to buy the edge of the expected move. Any breach the expected move, and we're gold, Jerry, gold. We're actually going to see great degrees of profitability. It is an age-old strategy. Iron condors are nothing new. This is not an iron condor. This is a gamma iron condor. It is specifically designed to take advantage, okay, of what we call a gamma squeeze. Are we in a gamma squeeze right now? Does anybody even know that term? Okay, are we in a gamma squeeze? Because I've been doing this strategy now. I've been doing this strategy, okay, for over 6 months. All right. And again, we've been in a gamma squeeze for literally like the past 6 months. And I cannot stress enough, if you're not using this at all right now, you're missing the bigger picture. And I'm going to show you, by the way, I don't like to just talk about like fictitious trades. I can show you 20, 30, 50 of these that I've actually put on, okay, and just profitability after profitability after profitability. The strategy right now, it is the hottest thing in the marketplace. How many people are out there buying gamma irons? Okay, and we are doing just that. We are buying this gamma iron. So the entire strategy costs us $2. What could we lose on the strategy? Could you lose $2? It's possible. It's plausible. Okay. Oh, all the right questions. People are like, are these short dated? Okay. Don't you worry about a thing. We're going to show you a lot about this. Okay. So I go out and I'm paying $2 for this. Could I lose the full $2? Absolutely not. We'll never let you lose the full $2. Okay. You pay $2 for this. We don't want you to lose $2. Okay. That could be a lot of risk. What's the max risk in here? $2. So I want you to know, okay, the max risk is the $2. So could I lose the $2? Yes, but we would never let you lose the full $2. What could I possibly make? Well, I can make money to the upside here. I can make money to the downside here, but you can't make money on both sides, right? So how much can I make to the upside? Well, this is a $5 wide spread. What's the most you can make on a $5 wide spread? You can make $5. You can make $5, but you paid $2 out front. So what could you possibly make? $3. $3 is max, okay, what we term profit. Max profit. Time out! All right. Who cares about right now? And I know this is going to drive you crazy. Who cares about the max profit? It doesn't matter. The whole key to this strategy, is what we term, okay, the prob of profit. The prob of profit. What does that mean? Probability of profitability. Okay. This trade has an incredibly high probability of making money. An incredibly high probability of making money. And that's exactly what we're going to explain. All in effect that I am doing, and it looks so simple because it is, all in effect as I'm doing is buying the edges. That's it. If you don't understand options, understand this. Stock was supposed to move in this range, but it didn't. It cracked out here or it cracked out here. Quite frankly, I don't know which way it's going to go. I don't mind saying, okay, at a time like this, throw your hands up in the air. You've watched the marketplace rally for umpteen weeks in a row. Either you were in it or you're not. Now you've seen it starting to sell off. You throw your hands up in the air like, I don't know what the future holds. Good. I'm glad that we actually got, some realistic crap out of this, because all that I hear in the media all the time, now we can keep going. The fundamentals are there. None of it matters. Do you think any of these trading firms care? All the trading firms are talking about right now is gamma. Gamma, 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 gamma. You got to buy gamma right now, which means, okay, just that. You got to buy these edges because there's a high probability of cracking outside of them. Okay, and all the marketplace has been doing is gamma squeeze, gamma squeeze, gamma squeeze. Let me show you, all right? Look, you could be one trade away from this. This is not just a gamma example, this is a trade. I mean, I set up, a gamma iron inside of the spiders. Okay, so I just, I took this into the spiders today, and I just wanted to show you what the P&L graph really looks like. And we're going to talk a little bit about this profit and loss graph here momentarily. So this is a trade, and it's about as realistic as it could possibly get. This is a trade, here, it's a $5 wide call spread, a $5 wide put spread. The whole thing is done for $2.35 debit. You got to move up here or down here. Okay. Question is the spiders even a good candidate for this? Okay. I mean, really, is the spider like a good candidate for it? Before we go there, listen, this is what you need to be doing right now. You need gamma irons in your life. The market, again, wildly unpredictable. Gamma irons, okay, are designed to provide consistency in an inconsistent marketplace, okay? Because the marketplace is nuts. And it's only going to get crazier, and there's going to be periods where it gets, dies down and so forth. But right now, okay, gamma irons, you got to realize they're non-directional. These are all the factors that you need to understand, okay, about this strategy and why. Again, these factors bring you to why you should be using this. Gamma irons, first of all, are non-directional. It's not that I'm anti-direction. I'm just telling you that right now, okay, that is an incredibly hard subject to breach with people, because there's a lot of people that don't get that the marketplace doesn't always go up. We could be facing, a decade, if you will, of a down marketplace. You just don't know where we're headed right now. So rather than take tremendous amount of risk in stock, look, number 6 over here, you never need to buy or sell the stock. I can't stress to you enough right now. I'm not telling you don't own Apple. All I'm simply telling you is something like Apple right now, I think you'd have to agree, doesn't just have a lot of risk. It has monumental amounts of risk. Just monumental. Okay? So you never have to buy or sell the stock. It's non-directional. It doesn't use stop orders. We don't need no stinking stops, because you use a stop order, you're going to get stopped out. And that's the one reality. First of all, stop, it's a 4-letter word, but stops are going to work. That's the problem with them. You define your risk because you know exactly what you can lose. Like in the last example, it was like 235, provides an extraordinarily high probability of success. I'm going to show you that in a minute. Limit your capital exposure. You want your exposure to be $235? You can do this with literally $235. You don't even have to risk that much. You can actually scale it back. You can do these strategies with like $70 at risk. Okay? And again, you never have to buy or sell the stock. Now, one of the key points to be made, and this is the area that I think that the experienced traders in here are going to get. This is for the experienced traders. I said that this provides a high probability of success. How could I know that? All right. It's called probability of profit. And what probability of profit has a lot to do with, it's called probability of touching. What probability of touching is, and again, I highlighted it on this particular screen. You literally have to turn your head kind of sideways to see this, but I'll script it over here. Okay. That says 50. Whoops. I'll make that cleaner so you can actually read it. This one right here says 58%. This little monkey right here says 60%. What those are, that is not a break-even point. Okay? That's actually the probability of touching. This is what we call a probability of touching. Okay? The profitability point. Now, profitability point I've actually predetermined in here. You have a 58% chance of touching down here and over a 60% chance of touching up here. You tell me why I want to do this. I'll tell you exactly why. Okay? Because if you're not like wildly greedy, you have yourself, okay, a strategy that has better every single expiration cycle, which can be a week, a month. Every single expiration cycle has a better than a coin flip chance of hitting profitability. And that's huge. And that's what this is about. That's what the gamma iron, okay, kind of breaks down to. But check this out. These are all headlines, okay, from the last few days. Nomura warns the negative gamma tremor is here. Okay. Oh, when was that? Oh, that was a headline today. Okay. The negative gamma tremor is here. All right. here, September 4th, how unusual trading fueled the stock market's incredible rally and fall. You know what they're actually talking about here on September 4th? They're actually talking about the gamma squeeze. Okay, SoftBank's option buying may have doomed, okay, overconfident bulls. You know what they're talking about here? Gamma. Okay, it's not going away anytime soon. There's been edges over the years that we've exploited. Okay, but this one, it's making like full-blown headlines, and people have no idea what it is. They just don't understand like the whole idea of like a gamma squeeze. Okay, and you got to understand that these three headlines, all they're basically doing, okay, all they're basically doing is putting what is in context and something that's not going to go away, like it's right out there in front of you. By the way, somebody actually had a great question here. They were asking, okay, more about that probability of expiring. Everybody was good. Everybody was good until we got here, right? Okay, that's the probability of touching. Probability of touching. Okay, I'm going to show you exactly how that works. All right, I'm going to spend a minute on it because I think it's important. The market's flying around over here. I'm going to cruise over to the spiders, and I'm actually going to show you something interesting in the spiders. Okay, so there's a calculation called the probability of touching. Okay, and what the probability of touching simply says, let me just show you something here. Okay, we're only going to go out 10 days. This is a 10-day option, and this 10-day option has a $15 right here, $15 expected move. It's supposed to go $15 higher, $15 lower. So if you look at this, I go about 15 bucks higher, $15 lower. Now I'm going to open up a bunch of options here. And I just want to show you. Okay. Now we're not exactly $15 out. Okay. But when you start looking at the probability of touching, it's telling you what's the probability. Okay. The probability of touching, when I say touching, which means getting to this level. Like for example, here we are at 333. What's the probability of getting to 339? Well, between now and 10 days from now, anytime in the next 10 days, there's a 69% probability. Does that make sense to everybody? So all I did is I took this probability of touching and I applied it, okay, to where I make money. So I took that and applied it to where I make money. And when I say when I make money, it's a predetermined profit point. I have a 60% chance of touching, which makes me a lot of money here, okay? Or almost a 58% chance of touching here, which is also, okay, a very nice, very comfortable profit. We're going to show you that here momentarily. Again, everything everybody's talking about right now is gamma trading. And this monkey, okay, that's me. Knows gamma trading, and so should you. I think that's using an iPad over here. Nah, this monkey uses a Surface. Okay, welcome to Gamma Irons. What I'm going to take you through right now, okay, are some of my trades over the last few months. The only thing I am displaying to you right now are Gamma Irons. Nothing more, nothing less. Okay, and I'm actually going to take you through from roughly, let's start in May, okay, until literally we'll come to present time. This is a SPY gamma iron. And when I say I want to kind of take you through it, look, this is the exact time, all right, and date, exact time and exact date. The reason I'm highlighting this, I am on Pacific time. So if it looks a little weird, you're like, hey, wait a second, those times are, I'm on Pacific time. The market here opens at 6:30 in the morning. So May 6th, exited, June 1st. This is actually to open. This says to close. This is the SPY, okay? The exact expiration date, all the strikes, both calls and puts. Again, the open, the close. Last but not least, what I paid, what I exited for. What I paid, what I exited for. So in this particular strategy, every $245 invested, I got back $315. It's 29% return. Now stop right there. Did you have to go out there and do $245? No. You could have done $2,450. You could have done $24,500 to get back what? $31,500, which is still a 29% return. Okay? I wouldn't suggest it not knowing this strategy to go out there and do that, but it's approximately a 30% return. Okay, so that's the first one that I just took you through. Now, let's actually pick up the pace a little bit here because I've got a lot of trades to show you. So this actually started in May. Okay, here we are in June. This is a GLD gamma iron. GLD, what is it? It's gold. So I entered June 9th, exited what? July 7th. Every what? $183 I invested, I got back $239. It's 30% return. Okay, like clockwork. I'm in, I'm out. That's it. Move on. Okay, what our members are saying. Well, here, every trade that I'm showing you this evening was done live. In fact, when I say live, we actually do them, and you'll see a lot of executions early in the morning. The reason I do the executions early in the morning, because that's the time frame that I'm actually live in front of TheoTrade clientele. There's approximately 6,000 people, okay, that are watching me do these trades live. We also text them out to people. So this is Cynthia got out at 236. Okay, Nick actually filled at 239. HA filled at 239. Okay, 238 over here, and filled at 236 and 240. Filled at two different prices. Again, these individuals are just filling this trade. They bought it, okay, and sold it along with me. Next on the docket, TLT. What's TLT? It's bonds, people. It's bonds. All right. What did I do in the bonds? I entered into this one on July 7th, exited July 10th. Now, this is where the gamma squeeze really started getting good. Every $168 I invested, I got back $222. It's a 32% return. Next one on the docket, this is another spider one. By the way, when something works, what do? You do more of it. Just plain and simple. Like, you don't even have to question. SPY gamma iron. Okay, so it's in the spiders. Opened on what? July 10th. Closed on what? August 5th. Every $236 I invested, I got back $309. 31% return. If you haven't noticed, okay, I'm just going to go back over a couple trades really quick. See the return here? 31%. See the return here? 32%. See the return here? 30%. See the return here? 29%. You see any deviation in there? Absolutely not. Why? Okay, because I'm an animal when it comes to consistency in here. So this is a SPY gamma iron. After this SPY gamma iron worked, what did I do? Another SPY gamma iron. Why? Because crap works. Okay, I just switch up the expiration. This one's for August 21st. This one's for August 28th. Here's one I actually, every $184 I invested, I got back $247, 34% return. Okay, then I went into the IWM. What's the IWM? It's the Russell. By the way, now, okay, I've got a multitude of gamma irons all on at the same time. So here's the gamma iron inside of the Russell. Every $204 I invested, I got back $266, a 30% return. Okay, again, you can see the exact price paid, the exit, the times I entered it. And again, you can see those times early in the morning. Why? Because that's when there's, a couple thousand people watching us. TLT, I went back into the TLT because it worked. Okay, again, do more of what works and less of what doesn't. Here I actually opened on August 10th, closed on August 13th. Every $195 I invested, I got back $268. It's a 35% return. From there, I actually went to Lululemon. Okay, so this is actually one of the first equity ones that you've actually seen. So Lulu, okay, opened on July 20th, closed on August 14th. Every $189 I invested, I got back $260. That one's actually for about a 38% return. Then I went to the Qs. Okay, why the Qs? Oh, come on, people. This is where it was at. July, August. July 28th, closed on what? August 19th, every $217 I invested, I got back $307. And I remind you once again, okay, I'm showing this as if you did one. I go out here and you wondered, like, I showed you account statements. How did I go from, $200,000 to, over 600K in that time frame? Okay, obviously I don't go out and fire off one lots. And again, I don't mind showing you, trade by trade by trade. I can even come into the monitor tab here, show you a couple of the positions. When I go under the account statement though and pull up the spiders, may actually knock down to one specific account. I come into the spiders over here. Look, 17 orders, 17 fills. Okay, these are all the opens and closes of that particular strategy. So again, this is the QQQ. So that's a gamma iron, 41% return. I'll tell you right now, I don't intend to necessarily make 41%, but you take what the defense gives you. That's how fast that marketplace was moving the other day. All right, what our members are saying. This one comes from Daniel Fabian. Hey guys, new member. And this is for back from July and August 8th and June 24th. I just took three quotes from our chat room. Hey guys, new member here. Okay, been lurking for chat for about a month. Okay, we're short SPY. TheoTrade is the only membership that I've ever had that pays for itself and then some. Brent W, you won't find a more supportive and profitable room anywhere in the retail trade business. Ali, Don helped me pay for 1 year of TheoTrade subscription with a QQQ. And that was actually a gamma iron in here. Okay. Speaking of the gamma iron, there it is. Here's another QQQ gamma iron. I just want to clarify. There's a QQQ gamma iron that was opened July 28th, closed August, 19th. Then we're actually on to one opened August 24th, closed on the 26th. Every $213 I invested, I got back 304, 43% return. Then we come into Netflix. Look, if it's working in the Qs, it's going to work in Netflix. This one was opened August 14th, closed August 26th. Every $203 I invested, I got back 265, 31% return. Then I returned over to the spiders. Are we getting close enough in time here for you? SPY gamma iron, August 31st, closed September 2nd, we're getting recent times over here. Over $205 I invested, I got back 269, 31% return. Here's a Home Depot, okay? By the way, I wanted to make this as recent as possible. Is this recent enough for you? Okay, this one was actually closed this morning, 13 minutes into the trading day. Every $170 I invested, I got back, 244, 44% return. Last but definitely not least, another SPY gamma iron, opened on September 2nd, closed on September 8th today. Every $211 I invested, I got back 275, a 30% return. You just flip back through some of these, The returns, are incredibly consistent from this particular strategy. This is not like, genius. By the way, here's today, Ken Baker, SPY, filled, diamond, filled, SPY, 276. Captain One Lot, filled, SPY on Tasty, 275. Tasty is another brokerage firm that we use, Eric, filled, SPY at 280. I just want to make a quick point. This gentleman filled at 280. Tess here, she filled at 277. Diamond filled at 276. The reason I'm pointing out, they bettered me. My best fill was 275. They actually waited. Derek Allen, done. That was beautiful. So we're firing off these trades constantly in here. But this is extraordinarily hands-off. You don't have a lot of time. It's not an issue. All the trades that I just showed today, each and every one of them, and the only trades that I showed you today, were displayed live at TheoTrade. Those were actually trades that were texted out, and we also use push notifications. So we text out trades, do push notifications, Trade results are perfect. The gamma irons as hands-off as it possibly gets. A fraction of your time is enough. I just don't want you guys, I do not want you guys to think that you're sitting there all day in front of your computer, You can, we text out the trade. It's hands-off. This is not going to be, when you come in here and you start building these particular trades, this isn't going to take a tremendous amount of time, What you have to know, though, is when you start looking at stuff like the spiders, and this is where we're headed in a minute. When you start looking at stuff, look at all the options in here. Look at all those options, and that's where we're headed right now, Listen, the characteristics of gamma irons, they increase in value when exposed to heavy volatility. They increase in value when markets sell off or rally huge. There's a significant profit potential in a downside move, but there's also a great profit potential in an upside market move. They lose minimal capital if we drift. If we drift, you can't lose your shirt overnight because the only thing that can hurt you is time. That's the only enemy here is time, Listen, if we drift for a week or two, time will start to bleed out. Who cares if we drift for a week or two? I'll actually show you something interesting. A moment ago, I actually showed you a trade in what? Lululemon. Let me just show you a little bit about Lululemon for a second. Because I love to show examples that are they're real, they're here, they're now. Lululemon. It did nothing, it did nothing, it did nothing, popped to the upside. That was it. That's all I needed for profitability. It did nothing. The other ones you saw in there? TLT. Bonds. What have bonds done? Nothing. They did nothing. They went up and they dropped and I was profitable. Then you just keep going on and on and on. Well, most of the times the stocks do nothing, but you're not going to actually lose a lot of capital in that if you could sit tight a little bit. Again, this is a strategy you want to use. It's a perfect spread to reduce risk of a stock portfolio, long or short. Got to be using this stuff right now because you do not have to hold the stock. It's an excellent tool, for those seeking returns for market events, for wild markets. And again, what do I have here? $2.35. I mean, again, the gamma iron below is being done for a $2.35 debit. But you got to turn around, you got to build this. And if this is the first time, and again, I don't mind saying this is the first time you've ever seen this strategy, when you start looking at this, you're like, It's 1, 2, 3, 4 legs. There's 4 pieces to this thing. Listen, don't let options intimidate you. Okay? Now, it takes a little bit of time to learn this stuff, but do not let these options intimidate you. Anybody can learn this. I mean, inside of a short period of time of an hour tonight, we showed you everything you need to know about expected move, and we showed you where the edge lies in expected move, right? Therefore, all you have to do is spend a little bit of time learning about the gamma iron. Once you get the gamma iron, that structure right, again, it's being done for a 235 debit. But using options, is like using a massive power saw. And power saws are going to be the quickest, the fastest, the safest, the easiest way, right, to cut wood. But the same thing is true of options. Options, the quickest, the fastest, the safest, the easiest way to get where you want to go in the stock market. But if you don't use options correctly, just like a power saw, you can lop off a couple of fingers. You got to learn to use this stuff the right way. People always say, what about this? And what about this? And what about this? Listen, this is what you need to know to successfully create gamma irons with minimal risk. This is like, you don't go out and just say like, all right, I'm just going to go out and buy me some options and I'm going to go for it. You got to know specifics. You got to know when and where do I place my gamma irons. Now, you saw a couple of ideas, right? I had something in the spiders, a little TLT. Listen, I'm giving you some of the products. I'm clearly showing you some of my trades. But that doesn't answer the where, the when. What's a good time? What's a good product? Why did I all of a sudden switch from the spiders and then I started using the QQQ and then I shifted to Netflix and I used Microsoft and, I'm all over the place. How often should I place these gamma irons? And do they have to be continually monitored? One thing I'll tell you about gamma irons, of all the strategies that we use here, and I really, really stress this, you can use what's termed a GTC order. You know what GTC stands for? Good till canceled. Good till canceled. Got to tell you something. Even I use GTC orders. Look, go to my monitor tab here over to the activities, right? I'm just working, instead of using alerts, I work one lot GTCs. I alert myself, These are all gamma irons that I have on right now. Every one of these is a trade that I have on right now. So I don't have to monitor. If I know the right order type to use, I don't have to sit there all day. I just have a price where I'm going to get out, How do I set up the trades? And what's the correct market volatility to place the trades within? So when I say how do you set up the trades, how do you actually build these things? Correct market volatility. Yeah, you know what? We talked a little bit about Tesla earlier, didn't we? Did you see any gamma irons in Tesla? Absolutely not. It won't work. I talked about NVIDIA. Did you see any gamma irons in NVIDIA? Absolutely not. It won't work. You have to have the correct market volatility. You got to know exactly the right market volatility to do this in the setup of the trade. What expiration cycle do I create my gamma iron within? When I say expiration cycle, what I'm actually referencing here is we come over here and please, I'm not trying to intimidate you. Just here's the reality. If you take a look at something like the spiders, look at this. There's 1 day, 3 days, 6 days, 8 days, 10 days, 13 days, 15 days, set, hike. I mean, look how many expirations. It's ridiculous. You have to know precisely the right expiration, precisely, the right strike prices, right? What options do I buy and which options should I sell? Once again, when you open up an options chain, and let's say you did this 27 days out and you opened up every single option, you feel like you're scrolling through like a half an hour in here. There are thousands of options to select from. You got to know exactly which ones to buy and which ones to sell. What's the correct probability of success? I showed you that probability over there and I said, it's about a 60% chance. So how do you know that? How do you know that that's the right probability of success for your gamma iron? Do I need a large amount of capital? Absolutely not. And every trade that you're seeing this evening, literally every trade you're seeing this evening is done in an IRA. I did every one of these in an IRA. So don't tell me you can't do it in your retirement account, because you absolutely, unequivocally can do it in a retirement account, because I trade in my retirement account now. What underlying stocks or indices might be the best candidates? Well, it depends. It depends on volatility. You saw me using spiders in the QQQ, and Microsoft and TLT and Lululemon and Home Depot. Okay, and I can go on for half an hour with some of the better candidates. How do I know when to get in and when to get out? Okay, what are the percentage returns supposed to be? Well, this one's pretty easy. What did I make? What was the most frequent number that I made on that screen? Okay, let's see if anybody gets this. How much should I make on almost every gamma iron? Because I'm just challenging you. There you go. Somebody already got it. It's right around 30%. Okay, 30%. And some people go, oh, but that's not enough for me. I have a strategy. Yeah, you have lots of strategies. You might be able to make 200%, and that is wonderful, fine. Okay, but you will not find anything as consistent, okay, with a high probability. So the whole key is there's tons of strategies that we can teach you where there's 200 and 300% returns. Tons of strategies with 200 and 300% returns. Push them aside. Because the higher the return, the lower the probability of success. Here, we're trying to achieve 30%, but we got to do it like clockwork, okay? We got to just keep banging this trade out, 30% and 30% and 30% and 30%, okay? Clearly, I already said you could do this in a retirement account, an IRA, all right? Got to be able to do it in an IRA because a lot of people now, they trade in the IRA. How do I size these trades for my account? We actually go through in detail like how to actually size the trades. You know, when I say how to size the trades, should I do 1 option contract, 2 option contracts, 50 option contracts? What's right for me? What's the right amount of risk? Like if I have $235 in that, trade, like I showed you a moment ago, we literally had $235 inside of a trade. Okay. How much of that 235 am I willing to risk? Okay. Because at some point you got to pull the ripcord. You're like, listen, 30%, 30%, 30%. Eventually you're going to take a hit. You got to know exactly how much of a hit to take. How do I actually go about building my gamma iron? Okay, literally in context, like, which buy, sell, what do I click on over here? Listen, let me show you what we do here at TheoTrade. TheoTrade, we create recipes in trading. I mean, and it's just that easy. When I say recipes in trading, you're going to go out, you're going to bake a cake, you have a recipe for it. You're going to go out and you're going to create a gamma iron, you have a recipe for it. Specific, step-by-step, entry and exit criteria. Okay, I can't stress this enough. When I start talking about like recipes and so forth, listen, that's what trading is really about. I worked for a derivatives firm. I worked for a trading firm in Chicago. And the first thing that they explained to me at this firm is, kid, at the time I was 22 years old, they were like, kid, listen, any thoughts or preconceived notions that you have, you better put them aside right now. Because what you're going to do is what we tell you to do. You're actually going to follow, okay? And they actually called them a reaction sheet. It told you everything to do as the market actually moved. We've recreated that. And we've created that literally in recipe format. Step 1, okay? What underlying do I select? Step 2, what should the volatility be? Step 3, selecting the right expiration. Step 4, selecting the right strike prices to buy. Step 5, the right price, strike prices to sell. Step 6, okay, what should the probability of success be? Step 7, okay, sizing the position for my account. Step 8, what's the right amount of risk? Step 9, execution of the strategy, and so forth and so on, okay? That's what a recipe for trading happens to be. That's just the entrance criteria. Then you got to be able to get out because trading, it all comes down to the what ifs. What might be a good iron candidate? What's the correct option expiration cycle? How much capital do I commit? When should I execute the trade? What strike prices, options do I buy? What do I sell? TheoTrade has your answers. So we build recipes with definitive criteria, literally checklists for each strategy and each unique variable that you're going to encounter. Again, when I talk about the checklist, I always think to myself about a pre-flight checklist. Okay, if you've ever flown before, not too many people are doing that these days. If you've ever flown before, no pilot hops in the cockpit of a 747, and literally hits the throttle and just goes for it. All right, in an aircraft like that, they have the most wildly detailed checklist. They just go through check, 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 and check. So I took that logic and I applied it, okay, to everything to make sure you could actually go through and find literally check by check in step format, okay, every unique variable you're going to encounter. Then you get you into the trade, but after you into the trade, then what do? Okay, what if expiration is coming? What if the volatility picks up? What if there's a dividend coming? You name a variable. I was exercised. There was a sign. Listen, TheoTrade is the answer to your questions. Give the right probability for the trade. How many option contracts do I trade for my account size? When do I close my gamma iron? What if the market sells off big? What if the market rallies big? What's the correct return for the strategy? What if the stock rallies massively? Can I fix a losing trade? It's all about how, when, why, at what price. And that, people, that's just the beginning of the variables that you're going to face while trading gamma irons. Okay? Listen, you can read what an iron condor is. You can go and Google what an iron condor is. Okay? You might even know how to build an iron condor. By the way, if you Google iron condor, there's probably going to be 50,000 pages that are going to come up about iron condors. And the irony is everybody talks about selling irons and selling irons and selling irons. Well, guess what? 2020, that crap doesn't work. Okay? What you need to understand, this is not about an iron condor. Okay? This is all about a recipe. It's all about criteria. It's about, the expected move and knowing the proper underlying, to even set this strategy in. You need TheoTrade's recipe for success for gamma irons. 20 plus years of trading experience. That's just me. I had access to client order flow for over 15 years. Literally viewed and studied millions of trading accounts. I read education for over 15 years. At TD Ameritrade. We had 7 million customers with the largest options order flow in the industry. That's where this criteria comes from. And criteria is your recipe for success. The following strategy and its corresponding criteria, requires the utmost attention to detail. And we spent years and years fine-tuning the gamma iron trade setup. When you approach the section on criteria, you follow the steps to build a trade. We structured a course around gamma irons. It's gamma irons, the ultimate guide to buying iron condors. I am the trade instructor. The course, is ready to go. And we did this way. We went through and we actually recorded the gamma irons course. It's just over 3 hours. It's available immediately. Because we wanted it clean, we wanted it edited. It's available immediately. It has 24/7 access. The class comes with a slide deck in PDF format. That PDF format includes entry and exit criteria. It's the checklist. It's also available immediately right now for download. The course is archived 24/7, but you can actually play these courses back on TheoTrade mobile. We have our own mobile application for both iOS, which is Apple, and Android, which is any Google device. It's ready to go. The course is $497 to go through it. But before I go any further, I want to reiterate something about TheoTrade. And I started with this tonight, and some people have probably arrived a little bit late. I think a lot of people, when they come to TheoTrade, they've probably seen or had some education elsewhere. And I'm going to tell you right now, when you look at a course, most people think, another course, it's another $500. TheoTrade is not about an individual course. We're not just about gamma irons. What we do here at TheoTrade extends well beyond any individual course. As I said earlier, we text out trades to our clientele. We do push notifications. How do we do that? Well, I'm going to explain that in quite some detail. But before I do so, again, I want to reiterate that what you're seeing with gamma irons, we do not sell classes here at TheoTrade, for $500, and then turn around and give you a pat and say, yeah, go ahead, go place your gamma iron. We have seen the gauntlet of classes out there. Listen, I started trading in the late 90s, and in approximately 2001, I went to work for Thinkorswim, which was a startup brokerage firm at the time. And my job at Thinkorswim was I built the education division of Thinkorswim. And while I'm building the education division of Thinkorswim, which became basically it's the premier trading application, while I'm doing that, I was exposed to a lot of different education out there. And what I saw is all these courses, they sell you a course for $497, okay? But then they sell you an indicator for another $497. But then you have to take a class on the indicator for $497. I'm just telling you, like, I've seen it all, okay? And that's not what we're about here at TheoTrade. And I cannot stress that to you enough, okay? What we do here at TheoTrade for $500 is going to absolutely shock you. Bear with me for a moment. First and foremost, okay, I strongly urge you, okay, to check out the Gamma Irons class, but I'm not going to stop there. We have a number of bonuses that I want to present to you this evening, okay, and show you. When I say bonuses, I don't even think that that's the right term. What I'm going to show you is what TheoTrade is about. And that's about, we don't go out and sell individual courses, okay? If you want to learn this business, this is the place to go, hands down, because we recognize that many of you, okay, have gone out and you've been through the gauntlet of other classes and gotten knocked around, and you end up spending tens of thousands of dollars, and for what? Okay, absolutely nothing. I'm going to show you, okay, in a moment what TheoTrade is about. Before I do so, allow me to show you, okay, the Gamma Irons. Here's the curriculum, okay? This is the class I'm telling you want to go through right now. Then I'm going to show you what TheoTrade is about. Number one, learn how to use, okay, the Gamma Iron strategy from the unique long gamma perspective and find out what other traders are missing. Learn to take directional bias out of the equation. You got to take directional bias out of the equation right now. Use the power of option volatility to your advantage, okay? Number three, step-by-step entry and exit criteria. You're going to learn how to put the trades on, when to take them off, nothing left to the imagination. Number four, how and where, okay? You're going to find edge in buying iron condors. This is actually a big portion of the class, is actually finding that edge, okay? Number five, okay? How to buy options premium in the current market environment using Gamma Irons, okay? Number six, guide to trading the Gamma Irons regardless of market direction. Of course, number seven here, using Gamma Iron condors to repetitively generate incremental gains in trading accounts, $2,000 plus, and in retirement accounts. So I just wanted to take you through the curriculum a little bit of how we actually structure these classes. The class itself, okay, goes through the logic of what obviously a Gamma Iron is, but we also go through the logic of expected move, and we spend time talking about implied volatility a bit. Then we actually go in to structure the physical iron condor, okay, and take you through every sequence of the entry and exit criteria along with a number of key examples. Now, okay, with that, people say all the time, I want a bonus, okay? I want to just hammer this home for a second. Because this is where people, they look at this and go, oh, it's $500, another $500, okay? First and foremost, for $500, I'll put this up against any education in the entire industry. I don't care if you've paid $30,000 for a class out there, okay? No one has anything even close to what we do here at TheoTrade. We go beyond a class or an indicator. Like, we actually understand this business. People want everything, and they want everything to trade and invest at one place, and they want it at one price. And that's exactly what we do. And I'm actually going to show you just that. One of the first things that we provide to you, the first bonus tonight, we give you access to 96 trading classes tonight from day one. You pay $500 and you get access to over 96 trading classes. The reason we do that, because I firmly believe going out there and charging $500 for a class, 3 weeks later, another $500 for a class, 3 weeks later, another $500 for a class, doesn't benefit you. It doesn't benefit us. We want to build a better trader. I'll explain that a little bit later, okay? We want people that have sustainability in this business. Right now, we have over 6,000 clientele here at TheoTrade. Let's say that again. We have over 6,000 clientele here at TheoTrade, okay? You're going to get access to 96 trading classes, everything that we've ever done in our archive, including, of course, Gamma Irons, okay? The Ultimate Guide to Buying Iron Condors archive, it's available immediately. In addition to that, we actually have maximum returns with infinity spread, guide to surviving and thriving in extreme volatility, volatility back spreads, guide to small account growth with in-out spreads. This right here, the in-out spread class, probably the most prolific class we've ever offered here. Small account growth with black book spreads, how to collect income being short, risk twist spreads, selling, high probability spreads, iron up, iron condors for income, selling premium and minimizing your risk, day trading NASDAQ futures. You name a genre of trade, we have it in here. All I'm doing is I'm naming off a smattering of some of the courses. And I want to make it clear, okay? From day one, for $500, you have access to everything. And every one of these courses, okay, every one of these courses has highly detailed criteria. There's nothing like TheoTrade anywhere. Every one of these classes, we can go out, we can charge $500, $500, $500, $500, okay? It's just ridiculous. I mean, we're giving you access to over $9,000 in classes alone, okay? And that's from day one. And again, there's 96 full classes in here. By the way, these classes, it's not just myself. There's a lot of, I think there's a lot of education firms out there that are probably one-trick ponies. They have one trader, okay? Here's our crew. We have 8 full-time traders on our crew. And I'll give you a quick introduction because the 96 classes, okay, I think it's important you guys know where some of these classes come from. Number 1 in here, Jeff Bierman, CMT, analyst, trader, and former chief market technician for TD Ameritrade. Any of you that are on a platform called Thinkorswim, you owe a bit of a debt of gratitude for Jeff Bierman because Jeff is actually directly responsible for over half of the studies in Thinkorswim charts. Okay, Jeff is also a CMT. He's also known as Professor Bierman around here. By the way, we don't just call him Professor Bierman. Jeff's actually a professor of finance at Loyola, and he moonlights with us here at TheoTrade. So Jeff worked with me at TD Ameritrade for over 7 years. And as soon as I exited TD Ameritrade in 2015, Jeff was actually the first individual that I give a call to. So Jeff also has the designation, not only a professor of finance, but he's also a CMT. Next in the list, Matt Williamson. Matt is actually our market neutral. He's a premium selling option strategist. So each one of these instructors has their own genre of trade. Nobody overlaps in any way, shape, or form. So Matt's a premium selling market neutral strategist. Then we come to Corey Rosenblum. Corey also has the designation of CMT. By the way, if you guys know anything about CMT, okay, it's an extraordinarily difficult designation to achieve. Each of our instructors, okay, have over 15 years of experience of trading. Some of them actually hail from the brokerage side of the business, some from the hedge fund side of the business, but a minimum of 15 years of experience. We happen to have 3 CMTs on staff. Okay, there's only a few thousand CMTs in this entire industry. So Corey Rosenblum, CMT, senior strategist and a resident swing trader. If you're looking for shorter term swing trades, this is a guy. Next in the list, Brandon Chapman, also again CMT. His specialty is macroeconomics, technicals, and fundamentals. I'll tell you something about Brandon, because a moment ago I said I would put the TheoTrade courses against anything. You could literally pay $30,000, okay, and not get the education that you're going to get at TheoTrade. And I'm pretty comfortable saying that because while at TD Ameritrade, Brandon worked in the education division, which, again, I ran part of the education division. I knew Brandon extraordinarily well. Brandon actually wrote the book for a class that was taught at TD Ameritrade. That class, okay, was 18 months long. Some people actually know exactly what I'm talking about. The class is 18 months long. The class cost $24,000 for 18 months of your life. Brandon actually wrote all of the course materials for that 18-month-long class. Both of us would agree that what we do here at TheoTrade will absolutely blow this away. It's $500, okay? Next in the list, okay? Steve, better known as Slim Miller, 43-year veteran stock options and futures trader. Slim's specialty is trading psychology and cyclical analysis. If you need, okay, help in terms of psychology in the marketplace, as I said, every one of us has our own genre of trade. We actually use Steve Miller predominantly because he has more experience than any of us do in this business, okay? And his expertise is trading psychology. Next on the list, Tony Rago. This is an intraday strategist. All Tony does all day, he just trades NASDAQ futures. That's it. He's calling out setups all day long inside of our chat room. Then we come to Blake Young. Blake is our newest instructor here at TheoTrade. I've actually known Blake for, I want to say 12 or 13 years. Blake also comes from TD Ameritrade. Obviously, a lot of people from TD Ameritrade, including Blake, Brandon, Jeff Bierman, All three of them actually worked at some point on the education team at TD, but Blake Young is a CTA, market profile, futures, currency, and commodity trader. I am thrilled that we actually just brought Blake Young on board. And Blake is not only the newest instructor, but he is the first instructor to actually introduce to our clientele market profile, which is time at price. If you know anything about market profile, okay, I had to search high and low. And I've actually waited for a long time to be able to pull Blake on board over here. Been looking for somebody that's decent in market profile for years. The timing was just right. Blake has also run a number of hedge funds over the years. I waited him for to finally get sick of that side of the business, come over here at TheoTrade, and we've done just that. Again, that's the first bonus tonight. And again, that first bonus, we just give you access to every class that we've done here at TheoTrade. There's the TheoTrade instructors. Bonus number 2. For $500, we include 3 months all access pass, okay, to TheoTrade. What does that mean? We give you unlimited access to TheoStream. Okay, it's a live trading chat room. We broadcast 6 hours per day. Granted, I know that, and by the way, we're broadcasting now 6.5 hours a day, but I realize that not everybody can necessarily watch everything all throughout the course of a trading day. Okay, so ease up on me. Everything's recorded. We text out, trades, we do push notification, but understand that our chat room, what we're doing, we're broadcasting our screen. We're talking you through the marketplace. I mean, every little nuance. It's exactly like this. People, how come your face is not on here? I'd much rather you see my screen. I'd much rather you see, okay, what's going on inside of the marketplace. Listen, okay, what we do here is provide real trade ideas, real-time market insights. We will text and shoot out trades, including gamma irons. We have 5 distinct trading portfolios. We also have daily coaching sessions with timely topics. You know what a coaching session is? It's continued education. Who does our daily coaching sessions? Professor Jeff Bierman. Okay, Jeff costs $42,000 a year at Loyola. Okay, we're getting an education here on a daily basis. We're getting more time in the seat. Okay, than those students do for their $42,000 a year. Because Jeff is on for an hour, 5 days a week here at TheoTrade. Okay, last but not least, and I put a tremendous amount of weight into this, our instructors here at TheoTrade will answer your trading questions via email. Okay, no one in the industry does just that. We will answer trading questions via email. You can ask us specific questions. And by the way, I want to make sure that everybody understands this. We don't shy away from emails. If you ask us, am I setting up this gamma iron right? You don't have to tiptoe and be like, so I have a friend in a hypothetical friend trade where it has Apple. Forget all that crap. You want to ask us an email or, a question in email? Shoot it out to us. It could be specific trade ideas. Okay. Almost all of our crew, and I want to make that clear, almost all of our crew has experience in the brokerage side of the business. We know how to answer trade and trade related. Well, Blake, and Brandon and Corey and Matt and Jeff, all of them have had experience like in here, and we know how to answer these questions. You can fire away. That alone, so not only are we giving you 3 months access, we're firing out trades to you, we're giving you access to 96 trading classes, we're letting you email us directly, like literally one-to-one for questions. If I can save you on one trade, you think that's not worth the $500? Okay, we're giving you access to another $1,000 to support trades and insight. Next on the list, we have 59 proprietary indicators and scans. Auto expected move. Now, auto expected move, the reason I highlighted it here, I'm going to give that one to you tonight. We also have the SPX expected move, gravity points, RSI Laguerre, Quantix. I use this every single day. NQ levels, which is Tony Rago. All right, next generation squeeze indicator, complex position tracker, IV rank versus percentile, which is a huge portion. That's a huge portion of the Gamma Irons class right there. Theo Quant trade setup, unusual put options. There's a ton more. All of the indicators, that I think that firms charge, like firms go out and they charge literally $500 per indicator. We give them all to you from day one. There's 59 proprietary indicators and scans in here. It's access literally to over $1,800 in indicators and scans. So that's all part of the second bonus. The third bonus, guys ready? Because this is a good one. I like this and I'm kind of excited about this. All right. Live class. We have a live class coming. Market Profile, discover tomorrow's levels today. What that live class is, it's our brand new instructor, Blake Young. That is going to be his premier class. Now, Blake Young, although he might be new to TheoTrade, he ain't new. Blake has been around this business, okay, for an extraordinarily long period of time. Blake's almost 20 years in the business, okay. He's going to give his first class here at TheoTrade. It's going to be live Saturday, September 19th, okay, from 9 a.m. to 11 a.m. It is a course that will be archived, but I'm telling you, go to it if you can make it live, all right? Because you can actually interact with Blake live in there. And I stress this like time and time again. This is, okay, the third bonus for tonight. We have another class coming up. Again, we have 96 classes. We're constantly driving new classes out. And you got to remember that for $500, you're about to be part of TheoTrade for the next 3 months. Well, guess what? This is the next class coming up. And if you're unfamiliar with Market Profile, okay, Market Profile is incredibly powerful. And I'll actually show you Market Profile. We call it Discover Tomorrow's Levels Today. What it does is finds short-term and long-term turning points in the marketplace. Helps identify new trends for the entire month. See future price levels today. Okay, these are key inflection points in the markets. Find true supply and demand levels. Okay, so when we're going to say time over price, what that actually is going to be is using volume profile along, okay, with what's termed market profile. You're going to ignore noise and learn how to ignore noise and fake outs, identify profit taking levels for existing trades. Okay, and the seventh bullet in here, manage risk with key price levels. Blake, again, in his first course, is going to follow our methodology of taking you through very specific guidelines and criteria on this latest class. I'm actually thrilled, again, to have Blake Young, not only on our crew, but doing his first class here at TheoTrade on Saturday, September 19th. And again, some people go, it's a Saturday morning. Okay, I'm telling you, it is worth, 2 hours of your time. You're going to learn a huge amount. Okay, this is Blake's like mantra. It's all about market profile. And it's the first time, okay, that anybody's presented market profile in this type of structure. I mean, what we're doing here at TheoTrade, we should include everything. Everything you're going to need to invest, okay? Everything you need to trade. We have classes, we have coaching, we have email access to the instructors, we have a live trading room, live trades and indicators and scans. Okay, we give access to mobile. So if you can't necessarily access this, on a computer, mobile device. Okay, you can even download the courses onto your mobile device and watch them from 30,000 feet. It's everything that you're going to need to succeed in this business. I mean, what we actually set out to build here at TheoTrade, it's literally the Netflix for traders. Every genre of trade. Again, I've got some people that are into psychology. We have day trading classes. We have swing trading classes. We have option classes. Okay, we have pairs trading classes. You name a genre. Okay, and it's there. Tonight, Total Theo is $297 for 3 months. Now, before I even read through everything again, okay, it's $297 for 3 months, okay? And the first question that always comes up over here, okay, what does it cost after 3 months? And the answer is $297. We don't do introductory prices. We don't do anything like that, okay? The other thing you need to know, this is a one-time payment. We're not like a gym membership where it's $297 after 3 months. It's $297. How do you get out? You don't. Okay, it's not a gym membership. I want you to remember something. It's a one-time payment of $297. After 3 months, if you want to do it again, you have to let us know. And then, okay, and only then, okay, we will charge you $297 for an additional 3 months. And you can go sequentially thereafter. Okay, it's $297 tonight. You can go to TheoTrade.com/gamma. So it's TheoTrade.com/gamma to enroll now. I'm going to reiterate a couple of things and show you a few more aspects before I go any further. So again, tonight, what do you actually get? The course on gamma irons. The course on gamma irons it's easily worth, $300 is nothing for a class. Okay, you simply cannot learn this stuff anywhere else. In addition to gamma irons, we're going to give you access to over 96 trading classes. All are available immediately on demand. But there's also new monthly classes. Clearly, we just said September 19th, okay, Blake Young is actually going to premiere here at TheoTrade with Market Profile and discovering literally, okay, kind of the levels for tomorrow, today, right? It also gives you access to our live trading chat room. And people are going to ask, what does that look like? We're going to show you here momentarily. Okay. And when I say we're going to show you what it looks like, what does a live trading room look like? Looks like this. This is where we broadcast. Down below over here is the actual chat room. Okay. We're commenting in there. We're actually going to show you, if you're brand new, start here. Okay. Different option strategies. I'm going to show you all about the TheoTrade site here in a moment. So we give you access to the live trading room. We're broadcasting 6 hours a day. We're firing out trades. We're texting out trades. Text push notification. We give you access to 59 proprietary indicators and scans. We have daily coaching sessions. And again, for $300 for 3 months, you actually get to email us. Okay. Again, we have over 6,000 clientele right now on the TheoTrade platform. We'll take this a step further because I know that some people get a little nervous about this, but look, TheoTrade will make it a completely riskless trade tonight. Okay, it's everything you're going to need to start, okay, from absolute novice to expert. And as I say that again, from novice to expert, I want to reiterate one more thing on there. Okay, there's some people tonight that are just brand new and they're like, I have no idea where I would even start with this. We have a start here menu. And I just alluded to it a moment ago, but I like to show it at this point. Options 101, options 201, options 301. Okay, again, I'll come back to that in a moment. There's a money back guarantee. Trade with us. Okay, and just make it a completely riskless trade. Trade with us over the next 3 months. If you're not completely satisfied, just email us. By the way, I don't put, anything on what's satisfied mean. It doesn't matter. Okay, what is satisfied? Doesn't matter. Listen to me. It's $297. Here's the bottom line. If you ain't happy after 3 months, email us your trades. Okay, if you're not happy, receive a full refund. We're not going to fight anybody over $297. There's 6,000 members here. The only way we want you here is if you're going to be happy here. Now, we had to put some money back guarantee stipulations on here because everybody, listen, to make it fair for you, fair for us. Here's the money back guarantee stipulations. You have to trade. That's all we're asking. Okay. Over the next 3 months, you have to trade. Again, it's only $297. You'll find it worthwhile. Just email us one time. If I can save you more than $297, probably in one email. The money back guarantee stipulations. You have to do 10 trades using any of the TheoTrade strategies. Remember, there are 96 classes here. Any of those strategies end criteria in the next 3 months. Do 10 trades the next 3 months. Your initial account value has to be $2,000. Oh, you have to follow our criteria. It doesn't even have to be for gamma irons. You have to follow our criteria on any of the strategies. I stress you have to follow our criteria because people are like, so I went out and bought calls and lost money. And I'm like, of course you bought calls and lost money. That's not what we do here. Okay. And you have to provide real account statements. Okay. This ain't paper trading, people. Now, the problem that we had here, we put a fully riskless trade on here and people never traded. All we ask is this. If you're willing to actually try it, you're willing to trade with us, okay, it's a completely riskless trade. Trade with us for the next 3 months. Do 10 trades. You ain't happy? We'll give you your $297 back. Okay. The only limiting factor here, we are limiting that. When I say limiting it, we will limit it to the first 30 people. Listen, get in a TheoTrade now. We're going to work with you directly. There are 30 spots, and that is it. Okay. On the TheoTrade riskless deal. We do that because, well, first of all, we have unlimited email mentoring, and we actually go through, you got to realize, 10 trades. Okay. Some people will do 30 or 40 trades in that 3 months. I'll actually go through and reconcile those trades myself. Okay. There's only so many spots. The first 30 people to enroll tonight, okay, get a completely riskless trade. If you're not happy after 3 months, okay, it's okay. We'll give you your $297 back. You can send us your trades. There's unlimited email mentoring. Okay. The riskless offer, never been available before with gamma irons. Plus, you're getting the live market profile, discover tomorrow levels today with Blake Young. Again, it's his premier class here at TheoTrade. He has put huge amounts of time and effort into getting this market profile class together. So it's $297. It's a completely riskless trade. I'll take you over to the site to enroll momentarily. I just want to show you what our members are saying. This actually came in August 3rd. Okay, it came in August 3rd, a couple of months ago, but it said, woohoo, thank you, Don. Okay, and I blacked out Ken's last name. Okay, I am never sure of trades, okay, that are new to me and wanted to structure myself. This is great to hear. By the way, this is actually a conversation that Ken and I were having back and forth about gamma irons. Okay, and the gamma iron class was a little bit new to him. He says, not to brag, okay, but this is due to you and your magnificent team. I am up this year 1.67 million in profit. I know Ken for quite some time, and Ken trades with a larger account. I don't care what anybody says. $1.7 million is still a large profit. Yes, I'm going to pull a big hunk of this out, okay, of my and wife's account. Plus, I'll give my granddaughter $50,000 to work on her master's degree, thanks to all of you. Okay, I'll let you know how this trade goes. I need to check in the chart on that Japanese ETF. Thank you again. Okay, the Ken family over here. One other one I wanted to share with you. This one comes from Curtis. Please allow me to impress upon you how incredibly valuable, okay, your first hour in the chat room was today. And I want to make something clear. This one was literally from last Friday, okay? Your true concern for the welfare of your clients, listeners, is unmatched in the industry, okay? You gave an incredibly practical advice for those feeling the pain, okay? Almost as if you were in their personal, trading culture. It was amazing. I only wish all of my I don't want to sell, in this case, keeps going higher, friends were listening. Basically what he's saying is all the bullish people, he was hoping that they were listening. What I was doing last Friday was trying to get people out of absolutely horrible positions. This is actually from Curtis. He's a CFA, CMT, former institutional portfolio manager. Again, to reiterate, this is everything that you guys get tonight. Just wanted to detail this. Go to TheoTrade.com/gamma. The first 30 people to enroll tonight will have a completely riskless trade. The first bonus will give you all access, okay, to the chat room. I'm going to show you that in a moment here. Text push notifications, the indicators, the scans, okay, daily coaching sessions. The second bonus, of course, will give you 96 classes and access to day trading and swing trading and technical trading, beginners options trading, advanced is a ton, okay? And the third bonus is the market profile. And the market profile class that's coming up, and again, that's September 19th, okay? I'm telling you, put stuff aside, make it live, discover tomorrow's levels today. You guys are going to love that class. Go to TheoTrade.com/gamma. In fact, I'm actually going to take you over there right now. Let me pop this up here, TheoTrade.com/gamma. I'm going to take you over to this site right now and detail a couple of aspects. Then I'm going to start answering some questions here tonight, right? So this is Gamma Irons, the ultimate guide to buying iron condors. To reiterate, it's $297. And I just want to click on here. And the reason I like to come over here and display this for just a moment, as you click through, it is a one-time, and I'll reiterate this like 5 times tonight because everybody asks it. It is a single payment and a one-time payment of $297, okay? You can also do 2 payments of $149, whatever, okay? The only thing I want to pull out over here is the fact that this is not a membership. It's a one-time $297 payment, okay? The other thing I wanted to reiterate here, when you are filling this out, okay, I know that people don't necessarily like to give a phone number. You should put a phone number down here. And the reason is we're going to text you out the trades. This will automatically enroll you for text. You do have to have a smartphone for that. Otherwise, okay, you can get the trades off of our site, but please put your phone number in there so that we can text you out the trades. The payment info is easy. Again, it's $297 one-time payment. If you cruise over, again, we're here to answer your questions. But of course, you can ask questions right in the GoToWebinar. But if you ever need to get a hold of us after tonight, support at TheoTrade.com. Again, I'm going to answer some generalized questions and then get into some specifics here. So it's TheoTrade.com/gamma. It's G, A as in apple, M as in mom, M as in mom, A as in apple. TheoTrade.com/gamma. Let me take you a little bit into TheoTrade. So this is what TheoTrade looks like. This is the live trading chat room. Okay, down below, this is all of our clientele talking to one another. Okay, this is somebody actually thanking us a little bit earlier in the day. So we broadcast right now approximately 6.5 hours a day in here. Okay, I was actually talking about volatility is downright scary. All right, that had to do with how low volatility was. So we're constantly not only live, okay, but we're also chatting with our clientele down below. The next thing here, if you're curious what some of the classes look like. Classes here at TheoTrade, there's option classes and option newbie classes and technical analysis. Just because I'm not looking at charts doesn't mean that we don't have classes in terms of chart. fractal energy, technical analysis, Fibonacci classes, volatility indicators, oscillators, okay, guide to time-based trading. I mean, it just goes on and on. The power of linear regression. That's actually one of Jeff Bierman's specialties. Tools to spot explosive moves. That's almost a brand new class in there. That's just a few weeks old. But if you're into option strategies, so that's my area of expertise. When it comes to options, sell premium and minimize risk. Okay, how to collect income being short. Okay, in-out spreads, the 2018 edition, selling options for a living, guide to maximum edge trading earnings, back spreads, volatility crash course, gamma irons. Okay, that right there, that's the mother of all classes right now. Controlling your risk. It just goes on and on. And again, if you're brand new, use the start here menu. I mean, I'll tell you what, even for those of you that are experienced, okay, I bet you we'll save you more than $297. Just watch this. Order execution, part 1, 2, and 3. So I spent 15 years in the brokerage world, okay? And one of the things I helped build was some of the order routing systems of Thinkorswim. I understand a lot about order execution, how the order, okay, is filled. Everything from the time you click on that mouse, we will help you, okay, get better fills in this class. You will be shocked, even the most experienced trader, how much you can actually learn about order execution in watching this particular class. So I'm telling you, just because it says start here, don't think that this is novice stuff. Some of this stuff is just, it is gold to you. Watch order execution part 1, 2, and 3. You guys will see exactly what I mean. And when you click on a class, okay, we actually take you through, right? And literally it walks you through every single nuance, okay, of these particular classes. All right, from there, again, we're back over here at Gamma Irons, the ultimate guide to buying iron condors. Let me answer a couple of generalized questions. Hopefully you guys got a little bit of a glimpse of the site. Oh, one last thing here on our site, okay? Everything is searchable. Everything is searchable. You can come in here and type in anything you want. You know, I was talking about like gamma. You want to know everything about gamma from me? Type in gamma and Don Kaufman, hit search, okay? Every single thing that's going to come up, all right? Everything. Gamma, gamma irons, Q&A, gamma irons, the benefits and risks of gamma, all right, buying explosive gamma, it goes on and on. All right, gamma and the paradoxical trade driving markets, okay, huge, huge amount specifically on this topic over here. Again, it's TheoTrade.com/gamma. Let me answer some generalized questions in here. Oh, what our members are saying, this comes actually from Todd Summerall. Hey, Don, don't know if you remember, but I emailed you a few weeks ago, told you my delta was plus a couple thou or more. You told me to smash it or I'd be in trouble. I smashed it. You saved my account. I just want to thank you. For your information, before Theo, I had no clue about Portfolio Delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. Okay, you can use this if you want, and I will. So I use this from Todd. The reason I bring this to your attention from Todd is that this was a few months ago. It was actually during the Corona crash. I'm telling you right now, you can email us, okay, and we will give you, all right, not just like, hey, you know, hypothetically, this is what you do. I mean, I told this gentleman, smash your delta, which basically means blow out of your position or you're absolutely dead. And he did, and it saved his entire life savings, okay? And I take that not with a grain of salt. Like, that crap is important to me. After 15 years in the brokerage business, you know, I started in the brokerage business during a crash in 2001. I saw what everybody went through in 2008. There was one day in 2008 where I watched clientele lose, okay, $400 million in 11 minutes. 11 minutes in 2008. I'll tell you the exact date. It was October 10th of 2008. Okay, people lost over $400 million in their accounts in 11 minutes. It's just, you just don't want to go through that. Go to TheoTrade.com/gamma. I stress to you again, the first 30 people to enroll tonight, have a completely riskless trade on it. It's $297. Like, I wouldn't stress about like the $297, but if you want a completely riskless trade, be in the first 30 to enroll for it. Also, follow me to the link for the expected move indicator. For those of you looking for the expected move indicator, come right over here to TheoTrade.com/gamma. I'll pop the address up there once again. Scroll towards the bottom of the screen over here, and you'll see the auto expected move indicator there. For those of you that are enrolling right now, okay, you need not, okay, come in here and grab the indicator from here. That indicator, of course, will be handed to you in the TheoTrade site. So do not worry about it. Just add to cart, worry about, getting into TheoTrade, and we'll actually show you how to load the indicators later. So again, it's theotrade.com/gamma. As I said, I'm going to go in here and I'm going to answer, some generalized questions. The other thing I'll do is there was a request in here, there was a request in here to make sure how am I part of the riskless, students. As you enroll, somebody said, hope I'm part of the riskless trade. I'll read off your name. I'll read off your name as you actually enroll. It takes me about 5 minutes to see your name actually populate in here, but I'll read off your name here momentarily and let you guys know that. So again, here, while I'm actually reading this to you and answering some questions, here's a couple of the people that are enrolling right now for the riskless trade. Louis A. from California, John D. from Arizona, Keith K. from California, Kevin G. from New Hampshire, Louis S. from New York, Altia S. from Florida. I hope I didn't butcher your name. Jimmy T. from Singapore, Michael P. from Georgia, Gary J. from California, Frank S. from Nevada. So that's the first, I think we're looking at about 11 people that have actually come through. So those 11 names are all on the riskless deal. By the way, this one's from Christopher. Christopher, this is August 6th. I wanted to take a second and say thank you. You've changed my entire mindset on trading from gambling on individual positions to building a portfolio that manages risk. I still have a long way to go, but today was notable for me. After probably close to a year of TheoTrade membership, today I found myself managing a position using Delta and actually understanding what I was doing and why. At that moment, I realized this is a whole different ballgame than I thought it was. I've probably left on the table at least 6 figures because I didn't understand what clicked for me today. So thank you. It comes from Christopher. And again, I take this stuff to heart because the first thing you guys got to worry about, and gamma irons are an incredible strategy. Listen, you got to learn to manage what you have on. The only way to make money in this business, and I'm telling you right now, the only way to make money in this business, is to mitigate and understand your risk. Nobody wants to hear that, but that's how people make money. You cannot put too much at risk. You got to learn the right strategies for these markets. All right, so I'm going to answer a couple general questions, and then I'm going to put some specifics in here. By the way, Lewis just said, I just signed up. Do I need to keep watching? You're all good. You're fine in there. So as long as you're enrolled, I read off your name because Lewis, you were in there, like one of the first names I read off. You're absolutely fine over there. All right, so let me actually come in here and some generalized questions. Then we're going to get to specific questions. So people always ask, what do I need to get started here? I just say a laptop internet connection. And frankly, I don't think you even need a laptop anymore. I use my iPad a tremendous amount. And just so you guys know, I don't have the crazy fancy iPad or anything like that. I have a $279 Walmart iPad. It's more than enough. I trade on it all the time. I do sit at home. I don't mind saying this. I sit at home and I have a 6 monitor setup with a ridiculous computer. And I find myself a lot of times, right now, I trade on the iPad a lot, and I monitor the trades on an iPad, and I actually watch TheoTrade on an iPad. So you need an internet connection and an iPad, and or you could use an Android device. I've actually got another Android device right here. So we have, in terms of the education, everything that you're going to need to get started from novice to the most extreme traders. And I say that because if there's something, and I really mean this, if there's something that you need in this business that we're not giving to you, I need to know about it. I want to know about it. If there's something that you think that we don't offer, tell me about it. Because that's what we're trying to do, everything we can, to be the educator that can provide everything. And that's why we have over 6,000 clients now here at TheoTrade, is simply because we do everything and we do it better than anybody else for $297. And we have 8 full-time instructors that no one in this business can hold a candle to the level that these instructors are playing on. The playing field has totally changed. And we've got former hedge fund managers, a professor of finance. It just goes on and on, the depth 3 CMTs. Okay, most of us actually carried a Series 24 broker-dealer license. Okay, it's pretty deep. The second question over here, by the way, there's a couple more people enrolling, and I'll read off your names here momentarily. This is not a membership. I have to reiterate this like 5 times, okay? This is not a membership. I don't like memberships. I've had fights internally here at TheoTrade, okay? Because I don't like memberships. I don't like gym memberships. I don't like any gym membership, okay? I just don't like it. And we do $297. And then if you want to enroll again, you enroll again for $297, okay, period. I hope you guys appreciate that, because to me, that means the world. If you guys actually appreciate the fact that I don't do that, and we don't want to do that to you here, you make the decision, and I think that you realize that what you get for $297, it's shocking. And the only reason we could do that is clearly we have 6,000 clientele here, so it helps. Number 3, okay, we're now providing Gamma Irons. We do a weekly video update. So not only are we texting out trades, but every Friday we will give you an update on specific Gamma Irons that we are currently in. And it talks about all the moves I'm making, the management style, everything from pretty much some soup to nuts about how we actually manage these trades. Okay. Number 4, we archive everything. Okay. We understand that you can't watch all day. So not only do we archive everything, we give you access to all of those archives. We give you access on the main website, and we also give you access on TheoTrade Mobile. You can download the archives. You can also play back the archives at like 1.5, times the speed, or 2 times the speed. You sound like a chipmunk, but you can actually play these archives back faster. Okay. Make sure that you add your cell phone number when you enroll, because you're going to receive trade ideas, those text messages and push notifications. So the phone number is where we text you, but you can also go ahead and download TheoTrade Mobile. Okay, use the same username and password, authenticate into the system, and we can do what's called push notifications. Number 7, you can email us anytime. You're going to receive a response within 24 hours. The only reason I put the 24 hours, most of our instructors are going to email you back within a few hours. But I put this in here simply because please do not email us with 10 minutes to go to expiration. We will do our level best, okay? But some of us are broadcasting and trading throughout the course of the day, okay? Everyone here at TheoTrade, these are traders, okay? They don't come out, they don't, talk about anything other than trade on a day-to-day basis with you. And they all have their genre, like they all have their expertise in their area. I don't influence that at all, okay? You have a question for them, we'll get back to you. Just know, okay, that we do the best to answer those emails within a few hours. 24 hours, though, you're getting a response. Number 8 in here, you're going to gain access to every course that we've done in the previous 4 years. Now we're actually approaching even longer than that. Classes, coaching sessions, everything is searchable, okay? Every trading topic you can imagine has an archive on it. You name a trading topic, we have something in there. Number 9, all the trades can be done inside of an IRA or retirement account. $2,000 is the minimum. By the way, the $2,000, that's not my distinction. That's actually the Securities Exchange Commission and FINRA. To trade these particular strategies, you have to have a minimum of $2,000 in the account. Okay. Oh, we can also help you get approved for options trading at several major brokers. So if you're having trouble, like people will go like, Charles Schwab doesn't let me do anything. Don't worry about it. We have brokerage firms. We actually have connections at all the major brokerage firms, because obviously many of us come from that particular world, whether it's E-Trade, whether it's Tastyworks, whether it's TD Ameritrade, which is about to be Charles Schwab. Okay, you name a brokerage firm, we can help you out there. There's 30 riskless spots tonight. We're down from 30 riskless spots. And listen, get results, take action, enroll for TheoTrade now. It's theotrade.com/gamma. Let me answer some of the questions from the chat room. By the way, a few more people are enrolling right now. I'm just going to read off a couple of names. Kevin B. from Texas, Brennan B. from Nevada, David B. from Wisconsin, okay, Hancock L. from Massachusetts, and Randy C. from Texas. Those names are also included, of course, in the riskless trade spots. As I said, it takes me about 5 minutes to see people having enrolled in here. Somebody was saying, do you use Tastyworks at all? Okay. The answer is Absolutely, unequivocally, yes. So we are using Tastyworks brokerage firm more and more every single day. That, and again, that is like kind of the up and coming firm, which you will hear here at TheoTrade. You will hear substantially more about Tastyworks. If you're unfamiliar, they're going to become the premier, boutique trading firm right now. And the guys from Tastyworks are the same guys I worked with at Thinkorswim. So we have over 20 years of history together. So I'm pretty comfortable, obviously, trading over there. Okay, a couple of general questions from the chat room. Does expected move for one day match up with option chain volatility and options expiring in one day? Ken, the answer is yes, but expected move changes in real time on an intraday basis. And Ken, if you're interested in intraday trade and expected move, we actually have a full course on that. I mean, I kid you not, we literally have a full course just on expected move and intraday trade, because that, for me, that just does it for me. That's like the area of expertise for me. I trade intraday and I use expected move, and I'll show you exactly how those trades work. By the way, again, it's somebody was asking again, it's theotrade.com/gamma. I believe we still have about, I'm just looking, there's a bunch more names coming through right now. We have about 7 or 8, and I'm trying to count here at the same time as talking. We have about 7 or 8 riskless trade spots still open. Again, there's a few more that are just coming through here right now. So continuing on over here, as an Australian, I'm not able to open a Thinkorswim account, okay? Don't even worry about it if you're an Australian. Actually, that's when you really want to use Tastyworks, and we will unite you with Tastyworks, okay? Because I don't want you to feel like you're missing anything. By the way, I'm, I got a soft spot for the Aussies out there. I finished up university in Australia. I lived there for about a year and a half and went to James Cook University in Queensland, Australia. So we take care of all the Aussies here. By the way, also, if you're Canadian, there's a few brokerage firms that we will suggest if you're Canadian. So somebody said this is like trading the VXX. Actually, it's not, okay? So the VXX is vastly different. And by the way, somebody was talking about the UVXY and the VXX, okay? We have a very specific classes on the on all the volatility products, but the VXX specifically. And you're going to find there's some flaws with that particular product out there. So I by all means, I suggest that you do check that out. This is not going to work in the VXX. All right, so just be aware of that. By the way, also, how are you determining the breach when it closes outside of the bracket? So that's actually a great question. So one of the things that is brought up over here, how do we actually determine the breach? One of the things you're going to learn in this Gamma Irons class is to look at what's called IV ranking, an IV percentile, and that's actually going to be a key factor. So this IV rank and percentile is going to be a very key factor, and this is available. This IV percentile is available on Thinkorswim. It's available on Tastyworks, available on a lot of trading applications now, and it's a very critical portion of understanding, okay, when to get in and when to get out of these things, and more appropriately, when it's outside and the profitability of it, okay. Somebody said, Jay asked the question, how do I actually sweep through or scan Thinkorswim to find Gamma Iron candidates? Jay, that's actually taught in the class itself. I don't want to put you off, but that's exactly what I was just showing you on the IV ranking. You can actually scan through, find the IV rank, find the right expiration cycle, and pinpoint trades within a few seconds. It's a lot easier to do than you think, than looking through charts and so forth. The Gamma Irons are all about the math. It's all about the math. It just has to fit. It has to fit, and that's it, okay? David was saying, my broker's IB, Interactive Brokers. Any issues with that? No. I mean, listen, IB, it is what it is. Like, their platform is not great, and their commissions are cheap. You know, I mean, most of the commissions are dirt cheap out there these days. You know, somebody was saying, they're actually asking about this. Somebody said, what about commissions for option legs? Commissions these days are so nominal that it doesn't even really impact us. Like for instance, Tasty works out to about 50 cents a contract. TD Ameritrade is 65 cents a contract. And it's so nominal. A couple of years ago, you had like, $10 and $12 minimums per leg. It was like $40 or $50 to do an iron condor. Now, I mean, you can literally put an iron condor on for like $2. That's the commissions. It's like $2 on one of these trades. So $2 on a $235 trade, I think, is more than applicable. By the way, a few more names before I answer some more questions. I don't want to butcher this. Edita from Texas. I apologize for butchering your name. John S. from Ohio. Jack W. from Idaho. Ronald M. from Washington. Michael S. from Hawaii. Kel H. from Denmark. So, Kel, I know we've emailed back and forth a couple of dozen times out there. It's good to see your name on here. All right, continuing on over here. Yeah, by the way, again, IB is fine. All right, just make sure. And again, I apologize. I know I just butchered your name. Not Kel. I know you. Okay, I butchered another name in here. I'm doing the best I can. The names. All right, next one. So Rob was actually asking, any losers from this strategy? All right, Rob. You actually asked it, so I'm actually going to show you. I have one right now that I'm nursing that could turn into a loser. And since May, I really started firing these off heavily in May. Since May, I haven't taken a loss in the Gamma Iron. You can look through every single trade and every single product I've gotten here. I have not taken a hit in the strategy. I can go through the account statement and literally show you, instead of looking through a specific symbol, you can see my account history for 30 days back. Okay, there's 136 fills. We can go through every single strategy in here. Okay, literally every single strategy, both buy and sell. Okay. Right now, I'm nursing one that could turn into a loss. Every one of these, like if you look at there's the spiders. Okay, this is actually the close. Here's a close. It's profitable. Okay, these are actually opens, right? And then you look at TLT. Here's the close. It's profitable. The opens, the close. You can look through every single strategy. The one that I'm nursing right now, I have one on the TLT. It's 17 days left, and it's right smack in the middle. It's going to be close. I can't tell you this one's actually going to take a hit. I can tell you though, okay, look at the size of this one. There's 2,000 contracts. You realize we have a lot of clients here and people follow these trades. Okay, there's between 2, 4, sometimes 6,000 contracts in here on any given trade. So that will actually be the first hit. Now, I have taken losses in the past, but since May, it has been an incredible streak. And you expect to take some losses. I mean, legitimately, okay, on this strategy, you're going to see about 1 in 6 trades should take a hit. All right. So moving on, a couple more questions I want to answer for you in here, and then kind of wrap things up over here. Where's the risk? Okay, the risk. So the risk in the trade is to the debit paid. So if you were looking again at my account a moment ago, and I like this. I don't always pull up the account on here, but if you look at my account and you see right here in Microsoft, see how I paid 203, 202, 202, and I did a bunch of one lot, sometimes 10 lots in here. But if you look at these trades, okay, that's the risk right there. And you can literally see me getting out of the trade, okay, like the next day. The Microsoft one was one of the fastest Gamma Irons I've ever had on. I literally put it on the 26th, closed it on the 27th. I've never had a Gamma Iron work that quick, but the risk in here is the 202, nothing more. So again, I can go back, that's 30 days. And by the way, I don't mind going back even 300 days. The one thing I try to stress to you in here, okay, I show everything. There's nothing that you're not going to see at TheoTrade. And if you think that, I'm a hyper trader, whatever it is, listen, this is what I've done for 22 years. So I have 1,300 fills over 300 days. Okay. Yeah, that's one account. And the other account, I have another, this is an account, I don't use that often, but I have another 131 fills there. But then I also have the Tasty account. Okay. So again, out of these accounts, 1,300 fills. I mean, I can literally take you through the entire history of Gamma Iron Condors in here. Okay. Everything. Every single trade is in here. Good, bad, or indifferent. You can see the GLD one that I did. It just goes on and on and on and on. Right. So there's a lot of strategies that we use, but the gamma iron right now, as I said, that's what's hot. That's what's working. And in this business, you got to learn whatever works. You press and just keep doing it more and more and more and more. Okay. How long is capital tied up? So Vic, the capital can be tied up. So I use sequential iron condors. And what that means is I may have 4 or 5 going simultaneously minimum, right? And that capital could be tied up from days to weeks to a little bit over a month. And it depends, and you'll learn this in the class, the type of duration you want to use on that particular trade. So I think that I got most of these answered. Okay. If I didn't, I will gladly answer them in the chat room live. Again, I start off every trading day. Okay. When TheoTrade goes live in the morning, I'm live at 6:20 Pacific time. That's 9:20 Eastern Standard Time. Okay. Or, Eastern Daylight Time. We're live 10 minutes before the bell, and we're going to go right to the close. But if you've got questions, by all means, I will be there to answer them first thing in the morning. If I don't catch you live, we'll catch you on email or in the side of the chat room, whatever it takes to help you guys out in here. Again, you can also email us after this evening, support@theotrade.com, or you can just chat directly in here. I hope I got the majority of the questions answered. I want to thank everybody for joining us tonight, and please, chat in, join us tomorrow in the TheoTrade room. Hop in there early in the morning, say, I'm a newbie. Thanks, everybody. Have a wonderful evening.